Welcome everyone to this year's Nonprofit Symposium. We're super excited to get started. Before I hand it off to our first set of presenters, I do want to cover some housekeeping items. So just so you know, you can maximize or minimize the webinar pane during the presentation using the red and orange arrow buttons. During the webinar, we definitely encourage you to ask questions. In that same webinar pane, you'll see a questions box where you can type in your questions and click submit. Our presenters will be answering those questions during today's presentation as time allows. We definitely also want to make sure everyone has good audio quality. So today we do ask that you are using the audio on your computers and not calling in to be able to hear us. If you're joining us here today for CPE, just a few reminders. You need to be on a personal computer, no smartphones, and logged in using your own unique URL. You also need to be logged onto our online software for at least 100 consecutive minutes if you're here for the entire time for the 2 hours of CPE. You also need to make sure that you actively respond to at least 75% of the polling questions and answer the evaluation survey at the end of the webinar. Today's CPE learning objectives are to evaluate the future of nonprofit organizations and how finance teams can prepare and persevere going forward. Determine how CFOs can implement changes to the way their organization fundraises during a crisis. Discuss how nonprofit finance leaders can implement using technology to improve efficiencies and review the importance of brand management during a crisis. And with that, I'll hand it off to Paul.
Thank you, Marie. Good morning, everybody. I hope that everybody is staying safe and healthy during these extraordinary times, and welcome to our annual Nonprofit Symposium. We've been doing this event live now for many years, but this is the first time that the event is being held completely virtually, and we're excited to have over 500 of you joining us today. Like many other sectors, nonprofits are dealing with a number of challenges as a result of the current crisis, including cash flow management, personnel layoffs, working from home, doing more with less, and finding the right balance of people, process, and technology to successfully navigate these unprecedented times and the associated challenges that finance professionals are facing. As a result, it's more important than ever now that nonprofits get that balance right. We've got some super session speakers and panelists today, and I hope that we can provide you with some valuable insights that you can take back to your respective organizations. Before we start though, Tom Schulte, Jeff Owens, who head up our Southern California and Southwest region nonprofit practice groups, and I are going to take a few minutes to go over our program for today and provide you with some information on the work that our firm does in the nonprofit sector, where we serve over 800 clients annually. And with that, I'm going to turn it over to Tom.
There we go. Happy Symposium Day, everybody. My name's Tom Schulte, and I run the Southern California nonprofit practice, along with Renee Ordino, Ken Teasdale, and Stacy Kowalczyk. So today's agenda, a lot of people have put a lot of time into this, and we've got some pretty great topics for you, especially for where we are in the world today. And so I'm going to go over them very quickly with you. The first one is fundraising perspectives, a professional, a client, and a millennial, and Dean. So for each one of these areas, we've got a person representing. So from a professional standpoint, we have Theodore Blackburn. He's from CCS Fundraising. From a client standpoint, we have two. We have Christy Rossi, who's the Director of Development from Diabetes Youth Families. And we also have our very own Mary Tressel from the Armanino Foundation. And then representing the Millennials, we have Anthony Rotolo, and he's one of our own very well thought of person within the Armanino group, and represents the Millennials very well. We actually had to ask him for his credentials as to whether he was a millennial or not, and we asked to see his driver's license, and he didn't have one, so he's a millennial. Next one, ever-changing laws and regulations. Oh my. So as we all know, that comes from Lions and Tigers and Bears, oh my, from the Wizard of Oz. Somebody explain that to the millennial guy, please. Again, we're going to have Dean, who I didn't mention the last one. He'll be on this topic, and he's moderating the prior one. And if you don't know Dean, he's not doing his job. Dean's sole goal in his life is take the 6 degrees of separation and bring it down to 3. And he's doing a heck of a good job in the nonprofit world. He's going to be on this. Of course, we've got, you've seen all the changes. You're all on our you get our email blast, and you know what's going on. And you've always seen Katie Brown attached to a lot of these, and Matt Petrosky attached to these. No better people talking about all the changes in the nonprofit world, and it's truly mind-boggling. And they're going to try and get a fix on this for you. The next one, advanced topics to improve efficiencies. These are the people that are going to take the information that you have available to you right now and show how you can use it to help you through these tough days. We've done our job, we've sent you the COVID-19 tracker. These are the people that are responsible for this. This would be our own Derek Magnafrau, Octavio Laus, and Pippe Akem. And they're going to be talking to you about that. And then the last one is communications in the times of crisis. So in the odd instance where maybe a nonprofit might have a time of crisis, this is going to be for you. And this is going to be the person who you want to have number 1 on your speed dial. That would be Vintage Foster from our AMF group. He is a master at this, and I'm glad he's working for us, with us, because he knows this area well, and I think you're going to be very impressed with him. So that's what we got for you today. Marie?
All right. Well, thank you for the background, Tom, on what we're going to be doing today. It's so good seeing so many people on our first ever national broadcast. This is really exciting. Wish we could do this in person, but we're going to make the best out of this that we can. So I want to take a little bit of time talking to everybody about who we are. I'll make this very brief, but I know there's a lot of clients and friends on the line. Maybe some people who don't know a whole lot about Armanino. So I just want to take a few minutes. So our core purpose, otherwise known as our mission statement, is really important to us. This isn't something that we just stick on the wall or on a pamphlet and address it every once in a while. We literally lead every meeting with this. And it's really to be the most innovative and entrepreneurial firm in the country. And the end goal of that is to make a positive impact on the lives of you, a positive impact on the lives of our clients, our communities, and the people that we serve. So I'm hopeful that today, through this presentation, you'll see that. You'll see that your life and your organization is impacted positively. We do that, we endeavor to do that through over 1,500 employees that we have scattered across the United States. And you'll see the map on the screen, which indicates where our offices are at, as well as where our employees are and where our clients are. We're currently the 20th largest CPA and consulting firm in the nation. And we have some awards and recognitions down on the bottom of the screen. I'm not going to go through those, but just to highlight a few of those, you can see those on the screen. Marie, if you want to flip to the next slide. So we have a dedicated team at Armanino of people that serve exclusively the nonprofit community. We do that for various reasons, but primarily because nonprofit organizations look very different from each other. A private school looks very different from a homeless shelter, which looks extremely different from a museum and performing arts organization. And so we put teams together into sub-niches that go deep into their industry expertise in order to provide valuable insights into what your organization can be doing to improve. And we do that through various services. So whether it's reporting, getting access to real-time data in order for you to make the most timely and strategic decisions about your organization's needs. Through technology implementations, we can deploy systems into your organizations to drive efficiencies and connect systems together that maybe previously weren't speaking to each other. From a compliance perspective, the traditional audit and tax services are there to ensure that your financial reporting obligations are putting your organization in the best possible light. And then from a human capital standpoint, from an outsourced HR solution, we can find and educate and enable your employees to meet your mission's goals. And so through the deep industry expertise and through the services that we provide to those industries, it really provides an end-to-end client service solution for the nonprofit community, which is why as a national organization, we're one of the preeminent nonprofit service providers in the country.
Before we start, I need to talk a little bit about the Armanino Foundation. It's a wonderful, wonderful organization. Here at Armanino, as you know, we've mentioned so far, you know, we work with over 800 nonprofits throughout the country, and as part of that work and the 300 plus people that we have dedicated to the space, it's really, really important to us that we're giving back to the nonprofit community. And we do that through our Armanino Foundation. Its mission is to assist charitable organizations that create a positive impact on the lives of our people and our communities, so that our folks understand that we're not just serving the nonprofit community from the perspective of professional services, but that we are serving the nonprofit community from the perspective of giving back. The website for the foundation is armaninofoundation.org. We provide grants quarterly to various nonprofit organizations. In addition, we perform a number of events throughout the year to keep our people engaged with the nonprofit community, including our Great Give, where we close down our offices across the country to volunteer at individual organizations once a year. And another one I'd like to point out is our volunteer vacations, where we sponsor our employees to take vacations where they volunteer at various nonprofit organizations. And we've had teams go as far as Thailand in the last few years on volunteer vacations sponsored by the firm. So it's a wonderful entity, but make sure you visit the website. And with that, we're going to take you into today's program and our first set of speakers.
Awesome. Thank you, Paul, Jeff, and Tom. As we get our next speakers up here on video, we're going to ask the audience 2 polling questions. Remember, you do need to answer 75% of these for CPE. And the first question from launch here is, have you attended Armanino's nonprofit symposium in the past? Yes, I am a returning attendee, or no, this is my first time. We'll give everyone just a few seconds to answer this one, and go ahead and close the polls in 3, 2, 1. And how awesome is that? We have a lot of new people on the line. Welcome. And our second polling question to get us ready for our first set of panelists is, have you halted all fundraising during COVID? Yes, no, or only partially stopped efforts? Great, we'll go ahead and close the polls in 3, 2, 1.
So yeah, I would certainly be surprised if any of our attendees had halted their fundraising. As expected, 89% of the group are probably doing more fundraising or certainly striving to be more tactical in their fundraising as they deal with the current crisis.
Great. And our panelists are all on the line, and we'll let them get started.
Awesome. Thank you so much for having us. With 89% of people actively fundraising and 57% a first-timer, there is no pressure on all of our panelists to give some great insight. First up this morning, my name is Dean Quiambo, partner, chief relationship builder at Armanino. I'll be our moderator for this panel. And why don't we do some intros? Ted, why don't you start? Oh, and Ted, you might need to unmute.
Well, that's a heck of a way to start. Thanks, Dean. I would like to thank Armanino for having me. I hope all of you and your families are well. I have the honor of being a partner for CCS Fundraising. I help oversee our firm's work in the West out of our San Francisco office. I've been with the firm for 18 years. We're an international fundraising consultancy, and we provide philanthropic solutions to nonprofit organizations across all sectors. We worked with more than 600 nonprofit clients last year. We're delighted to be here today. We also want to say that we're committed to transformational change in our sector, and we stand in solidarity with our Black colleagues and our clients and partners and friends and large society, and loudly and unequivocally say as a firm, Black Lives Matter. And that's very important to us as we move forward as a company and in our space.
Go ahead, Mary.
All right, good morning, everybody. My name is Mary Tressel, and I'm very proud to be the executive director for the Armanino Foundation. We've been around for 3.5 years. We have raised over $1 million, and most of that comes from our staff and our partners. So the passion for compassion at Armanino is great. And to echo Ted, we also take current events very seriously, and this week we will be introducing a new area that we are funding, and that is racial justice. So we're very happy and proud to be able to support organizations in that arena.
Awesome. Christy.
Hi, good morning. My name is Christy Rossi. I'm the Director of Development at Diabetes Youth Families, located in the San Francisco Bay Area. We run camps and programs for children, adults, and families affected by type 1 diabetes. I have about 15 years of experience, mostly with youth serving nonprofits here in the Bay Area, and happy to be here. So thank you for the invitation.
Thank you, Christy. And Anthony, our millennial. Oh, you might need to unmute, Anthony.
Expect it from the old guy here, right?
That's right. That's funny. It's probably a technology that, is dated. Anthony, are you able to? No, we still can't hear you, Anthony. Check your microphone or the green mic button, if you can click on that. And you'll let us know when you get going.
No.
There we go. Go ahead.
There we go. Very weird. It was saying I was unmuted the whole time, but audio on. I'm the millennial. Hi. And I have technical issues. I am a finance consultant with Armanino. I work with our strategy and transformation practice and our Dynamics 365 implementation practice. I came into business with the goal of creating a more equitable community for everyone. So I'm excited to be here today and offer my insights.
Okay, great. Well, our first question, let's get started with everyone fundraising actively right now. Christy, maybe you can give us a sense of what the current environment is like. How's it going?
Well, this has certainly been a roller coaster over the past few months, as I'm sure we are all feeling that. It's definitely been very challenging, a lot of hurdles to overcome, but a lot of really great opportunities and silver linings that we've been really trying to focus on. So for our organization, Several weeks before COVID hit, our executive director, who'd been with the organization for 17 years, let us know that she was leaving the organization. So we immediately jumped into a robust outreach and communication plan and focused on back to basics. We need to talk to our donors, our funders, our stakeholders, and communicate our plan through a leadership transition. Then COVID hit. We all started working from home and needed to quickly make some decisions. And I'm proud to say that our board was very proactive on that front. So by the end of March, we had made the difficult decision to cancel all of our summer camps, all of our summer programming, to move it virtual, and also to postpone our gala, which was going to be held in September. So because we pivoted so quickly, it really helped us to reforecast our budget, recognize the deficit that we were going to see from not running programs and a potential fundraising deficit, and then adjust. How are we going to reduce that deficit, get rid of it entirely? So being able to have some time to plan has been very helpful to us. And then again, getting back to basics, utilizing our board to reach out to major donors, to funders, to share with them what we were doing, where our challenges were, and inviting them to become part of the process in a deeper way to help us get through this.
Now that sounds very, very encouraging. Ted, as a consultant to a lot of nonprofits, you guys are pushing out a lot of best practices right now, and I think Christy might have covered a couple of them. What are some of the best practices right now, and how do they align to some of what Christy was talking about that they're doing in real time?
Yeah, thanks, Dean. I think Christy and her organization really approached addressing the crisis from a philanthropic perspective out of the gate the right way. I think we saw so many of our client partners really focusing on connections with donors and beginning with these wellness calls and reaching out directly. And, you know, as we moved into the crisis, there was no playbook. And I think the idea of maintaining that dialogue, reevaluating how you're going to operate, both from a fundraising perspective and an operational perspective, was really important. As we get through this a bit more, I think those principles are a little bit more heightened, and we're moving into the recessionary environment that we're in, and we can look back to some of the lessons learned from the previous Great Recession that helped inform our initial advice out of the gate with COVID, but are becoming even more relevant. I mean, if we look back to 2008, 2009, even 2010, what we saw is that organizations that stayed connected, continued to engage donors, and did it with regularity and frequency, and did it in a personal way. The more personal, the better, as Christy suggested, and was right on, was really important. Now more than ever, I think organizations really need to communicate their immediate short-term needs, and then how those needs tie to the longer-term objectives and needs of the organization. Initially, it was simply COVID relief and response. Now we're in a kind of reemergence period to a certain degree where tying those immediate needs to your long-term needs is really important. We think that you've got to offer flexibility to your donors. As you can see, people are not doing wholesale cancellations, and you shouldn't, but you've got to think a little bit creatively about maybe postponing or redesigning an event, a virtual event, or thinking differently about a capital campaign timeline, or maybe even the case, or how your donors pay their pledges and commitments over time, and having some flexibility there. And then, you know, this idea of engaging donors is really important, and we talked about, Christy and I talked a little bit about this in preparation for the panel today. We don't want to make decisions for donors. We want to give them the opportunity to tell us where they are and to partner with us on how they can help the organization in a genuine way. So you got to be transparent with them, tell them where you stand, partner with them together, and think about asking when is the right time to talk about that gift, and really have that close dialogue. Again, the more personal, the better, and the more frequent, we believe, the more effective you'll be. And you've got to continue to push forward and almost out hustle what we know is going to be a challenging environment moving forward.
That's right. The challenges are there, but But Christy, we don't want to make those economic decisions, right? We need to ask, but we don't know how big or small, right? We only know what we need. We don't know what the donor is able to do. How does that look? What does that look like right now in the real world when you're making that ask?
Sure, and we've certainly had board members and other folks who have been hesitant that we can't ask right now. We're going through a global public health crisis. There's an economic downturn. There's all of these reasons why asking, which is an intimidating thing to do to begin with, it brings another layer to it. But we have to remember that our donors, our funders, they care about what we do, and it's still important to them. So to kind of piggyback off what Ted said, we approach these conversations as, first of all, it's a check-in because these are relationships. So how are you doing? Did you survive distance learning with your 2 small kids at home while you're trying to work full-time? What's going on with you? We care about you. And then also, we know that you care about our organization. So can I tell you a little bit about what's going on, what decisions we've made and why and where we're pivoting? And then, is this a good time to talk about how you can be involved, how you can help us? And if it's not a good time, we certainly understand that. And let's set up a time later, or can I circle back in a couple months when it's a better time? We definitely balance being respectful and caring about our donors, but also recognizing that they want us to succeed and they want to be a part of it. So we need to give them that opportunity.
I love that. Yeah, they definitely, your community wants to see you succeed and they want to be a part of that. I feel like that is a key message that is resonating right now across many demographics. Anthony, as a young person on the panel, how does that resonate to you, right? Like how does being a part of it, what does that mean to a millennial these days, right? Because maybe, we always have the major donors that Christy and Ted are going to go talk to, but if they're going to get the wide range of donors and get the many millennial maybe type of donations, what does engagement look like to you?
Yeah, so can you guys hear me better now? Is the audio a little? All right, fantastic. It's a great question, Dean, and I think back to right when this crisis started, a COVID-19 crisis. I was with my girlfriend's parents. They have a yoga studio, and when they were trying to keep their customers informed on what was happening, I realized how connected they were to their customers and how easy it was for them to connect. I think this is equally as important for nonprofits as it is for businesses to connect with people. And as a millennial, I will say that I have received most of the campaigns for nonprofits that I've donated to through crowdfunding and through like push advertising on social media. There's a company called Omaze that really fascinates me. They extend the reach of nonprofits fundraising efforts to millions of people as opposed to a small group of donors locked into one gala. And as a millennial, I would say that gives me the visibility into many more areas that I can actually make a difference with my smaller donations.
Outstanding. And speaking of engaging millennials, at Armanino, Mary, we have lots and lots of millennials, and you run our Armanino Foundation, and you've had to flex quickly. Give us some insight into what that looks like and some of the things that you've had to do.
Sure. So I think, first of all, engaging millennials, engaging everyone at Armanino. The foundation was a brand new idea 3.5 years ago. And what we've done is really made it democratized. Anyone within the firm, whether you're a staff or even interns, actually have nominated their favorite nonprofits for grants, and we have followed through on paying out those grants. We also, with our Dollars for Doers program, if someone's volunteering out in the community, we will pay $10 an hour for the time that they're putting in their volunteer service. And we make all of this very simple. None of our forms take more than 5 minutes. To sign up for our payroll deduction, it takes less than 30 seconds. So we really make it very simple for everyone. And then the pivot, I think, that you're talking about, Dean, Paul mentioned our Great Give Day, and it's everyone's favorite day at Armanino when we close the office, close our emails, and go out into the community and volunteer. And we just could not do that in the same way this year because of COVID-19. So we took a brave pivot, and we provided 10 different virtual volunteer activities for people. And the most popular actually was the Red Cross, American Red Cross mental health training that we offered. And so people took that course online and it empowered them to recognize mental health struggles they may be experiencing, but also their friends and family. And the feedback on that was amazing. And we added a new layer. We created a virtual auction this year, and we'd never done it. I spent 1 week investigating tools and another week building a virtual auction site, and then we were up and going. And we set a goal of $7,500, and we actually raised $25,000. So it was an amazing, amazing outpouring.
So Sharon, what tool did you use for the virtual auction?
It's called Charity Auction Today. It's a very simple name.
Awesome.
So super easy to implement because if I can do it, anyone can do it.
Well, Mary, the other thing that you said was that you know, before people had so much fun even just watching the virtual auction.
Exactly, and we got 20 new donors, right? We were talking about the foundation all year long to our team, but 20 people who'd never donated before took part in the auction. One manager, again, never a donor, paid $2,000. She bought about $1,500 worth of auction items and then tacked on $500 in just cash donation on top of it. So amazing to be able to engage. You just kind of have to try everything. I think that might be the advice that Ted and Christy have. Try all different ways of fundraising to get people involved.
Wow, that's great. That's great. Speaking of advice from Ted and Christy, one of the things that we're hearing right now, or I should say two things. Number one is, you know, the need for nonprofits is great, maybe greater than ever. But number two is, you know, let's be in touch with reality. Let's not be tone deaf with what's going on. Ted, how can we reconcile that right now as a nonprofit community in our fundraising efforts?
Well, you know, I think it's really hard. I mean, I think again, leading with empathy and trying to understand a donor situation is really important. But you know, if we presume that we are actively engaging in conversation with our donors, which is critical through these challenging times and will only help strengthen your fundraising in good times. You know, I'm reminded back to an event that we put on every year around the release of the Giving Institute's Giving USA report. And we had a major Bay Area philanthropist last year on the panel who said, you know, don't shine us up. You know, we want to help you. We want to partner with you. Show us the real needs. Show us how we can help. And let's be in dialogue about how we can solve the problems together. And I think so often, I mean, we try and color things for our donors to make them really think that, you know, obviously we want to operate from a position of strength and donors want to give to winning causes and all those things. But if they truly care about you and they want to make a difference, showing them in these challenging times, you know, what those critical needs are now and then how they tie to the organization's success moving forward is going to serve you better in the long run, and it's going to strengthen the connection with that donor, particularly donors who are being asked from so many different organizations in so many different ways. Having like, again, true authentic conversations with them can really serve an organization quite well and help advance that conversation forward.
Outstanding. Christy, what are your thoughts on that? How are you reconciling some of this right now?
Sure. So just to give you an example, we do a large direct mail and online campaign in the spring, which is for our scholarship fund. It's Send a Kid to Camp. You can make a difference for a kid this summer. Obviously, that has really shifted for us. So, you know, in terms of building that relationship and deepening it, we really wanted to tell the story of our organization. We've been around for 83 years, you know, and we remind folks that back then, our campers used to store insulin and keep it cold in the river at the camp. And so the true story of our legacy and our history as an organization is that we're resilient and we've made it through economic downturns and fires near camp and all of these different things to get to where we are. And now this is the latest challenge that we need to overcome. And we need your support to make sure that when we can open up camp and welcome campers back, that we're ready. So help us do that. Help us keep the campfire burning bright, and to ensure the longevity of our organization. So I think it's really, to Ted's point, about transparency, and also about storytelling and connection.
And when you're talking about storytelling and connection, Ted and Chrissy, is stability part of that story? Do we like to say that, hey, we've been here, we're gonna be here, we're okay, but we just need some help right now? Is stability a key message?
I think it is. I mean, we're asking our donors to make investments in our missions and in our organizations, and they want to know that you're going to be able to continue pursuing that mission, unless you can achieve it and find a vaccine for COVID or whatever it is. Fingers crossed. But yes, I think it is important. I think you've got to put their role in that in context too. And it has to be balanced with other donors as well. It can't just be, we need you to save us. It has to be, you play a critical role in us being able to stabilize and continue. And if you do that, it's going to inspire others to come along with us. Think about if we could tell this story to other donors. And we're going to need to do that to continue to, to be able to pursue our mission. But that stability is important. I think you've got to put it in the context of the donors giving, and let them know that others are going to come along if they participate.
Well, and Chrissy, with regards to your spring appeal, how did it do? What were the results? I wanted to circle on that.
Thank you. Yes. We raised $20,000 more than we did last year. And to me, that speaks volumes to presenting an authentic message and a direct ask. And the commitment of our donors recognizing that this is a challenging time. And though there are so many asks and there are so many more pressing public health concerns with COVID, that what we do is still important, and they are with us and going to make sure that we get through this. So it was really exciting to see, and has helped us to frame the rest of the year and recognize that we're in a fortunate situation, and how do we capitalize on that?
That's huge kudos, Christy. To do better this year than last year, that's amazing. Great job. Anthony, when you hear about stability, does that resonate to you, or are you wanting to hear about impact? What do the millennial donors, what do you guys want to hear about now, and how do we get you to open that pocketbook, right? How do we get you to open up that phone and just start donating away, right? We know you love Venmo, so how do we get it going?
I think there's a couple of key factors here, and one of them you touched on it really well: impact. As a millennial, I think our generation is really driven by impact, and that's going to be it is a trend you see in products that are doing well, certifications that are doing well, organic certifications, things like that have grown over the past 10, 15, 20 years since I was a little kid. And I think that emphasizing the impact you have is really important, and especially in today's environment. So that is a really great way to reach people like me. On another note, though, I think showing millennials that you value their small contributions on a more grassroots level is really important. Looking at the inequalities in our economy and our society today, pointed out by recent events, I find it more important than ever to contribute to building an economy that is more equitable. And for me, that means in a large part voting with my dollar. I try to do that for all causes I believe in, whether it be environmental, social justice. And I feel the same way about the dollars I spend donating. I want to vote with my dollar. I want to contribute to a system that works to represent the masses. And I think that ultimately we need to shift away from big philanthropy, because while it's great, I think Bill Gates is our best case scenario with big philanthropy, and there's a lot more billionaires out there that don't have the heart that he does and his organization does. So I really appreciate when I feel like I'm being valued for the $3 I donate, as opposed to being well, please give us a little more than this billionaire who already gave us a bunch of money.
Ted, what are your thoughts on that, Ted? I mean, it seems like some changing demographics here, and we started earlier about just what's happening in our social culture today. What are you thinking about that?
Well, it is interesting, Giving USA released the giving results for 2019 yesterday. It was the 2019 was the most philanthropic year since they've started, the Giving Institute started, and the Lilly School started measuring it since 1978, right? $450 billion was given in philanthropy in 2019. The sectors that had great growth were the arts and higher education, and we see the biggest gifts going to these academic medical centers and colleges and universities, and we know that those organizations put so much resources, time, attention into that top 1% of donors. I mean, you look at 1% of donors representing 90% of philanthropy in higher education. In independent schools, 3 to 5% of donors on a given year are providing 90% of campaign dollars. It is a little bit of a reflection of the concentration of wealth in our society. I think more organizations, particularly through this, are going to be pressed to be more effective in building virtual communities, building virtual communities in addition to giving. In 2019, before all of this, online giving represented 8% of all philanthropy. That was a drastic jump in year over year, and it has been jumping year over year. So I think slowly but surely, the industry is adapting to, seeing the benefits of online engagement and giving. And I think it caters to millennials for sure. And they are our most generous demographic. 84% of millennials give to nonprofit organizations and charities, which is higher than other demographics. So we hope. We've lost donors. There have been fewer donors giving more money since the recession. I think we can only hope that with technology, with everybody being forced to use these digital communities much more so like we're doing today, that we can democratize philanthropy a little bit. That is another, we have many, but that's a systemic shift. And it's going to be challenging, and I think organizations that start looking at it earlier are going to benefit in the long run.
Okay, Mary, with regards to the Armanino Foundation, you've done a great job of keeping people involved and donating often on a routine basis. How have you done that? How have you created that engagement, and what platforms have you enabled?
Well, I think there's a couple of things. I think I talked to our staff advisory board, which is populated with millennials like Anthony, and they talk about the reason they value the Armanino Foundation is they can participate as much or as little as they want. And so we provide a wide range of ways for people to get involved. And then with the donating from the very beginning, and we do have a captive audience because the majority, again, of our funds come internally from our staff and our partners. But from the very beginning, we created the payroll deduction program. So again, 30 seconds to sign up, very easy. It's, the average donation is $20 per pay period, but a lot of people give $5. They give that, they give away 1 Starbucks a month to be able to donate to the foundation. But on top of that, we went to our partners when we started the foundation. We said, we need you to set the tone from the top, and we'd like you to match our staff donations 2 for 1. And the partners overwhelmingly supported this idea. We set a first-year goal of partner donations for $50,000. And after the first week, we got a commitment of $100,000 from our partners. So again, there's just this real passion at the firm for giving back. And when we talk to our staff donors, they give to the foundation because we support the groups that they support, but they also do it because they know their dollar will go further. They know by giving $1, there's that $2 that's matched to it, and there's $3 of giving power. So those are two really big reasons of how we've been able to get great engagement. So we have 70% of our firm participates in the foundation, and 100% of our partners do.
Wow, that's awesome. I'm so proud of that stat right there, Mary.
Yeah.
Ted, there was a lot of nonprofits. It felt like everyone was in some sort of campaign, whether it was a capital campaign, an endowment campaign. It felt like it, and then all of a sudden, we know what happened, the unexpected. What are you telling people right now that might have been, caught in that tide?
We did a survey of all of our, our network. We got about 1,100 respondents, and we asked a question about that, Dean, of these 1,100 organizations. 60% of the organizations are pressing ahead. 20% are still trying to figure it out, and then the balance have made some significant adjustments or paused or canceled. Right. Our advice and what we know from the Great Recession is that those organizations that pressed ahead in some way, shape, or form ultimately reach their goals. And we've done some statistics on this. We look back at 119 campaigns that started between 2007, 2009 that we worked on. 86% of them exceeded their goal if they stuck to it. 90% raised 90% of their goal. And in total, this is just our network, right? 119 clients at the time doing campaigns. $6.7 billion was raised in those campaigns. So not only did those campaigns end up being successful to fund their missions, they ultimately were better positioned for success later on. And you got to be flexible and creative. Maybe reconsider goal. Definitely consider timelines. I mean, I think many of our clients have said, all right, well, this quarter is going to be really challenging. We don't know about the next. Let's add on 6 months to our campaign time. Offer donors the opportunity to do the same. So press ahead, offer flexibility, be creative around timeline and case, but continue to use the campaign as a way to engage and ask donors.
Great, Christy. How have you engaged your donors with regards to flexibility? And you run summer camps that weren't going to happen in person. Tell us what you guys had to do.
Sure. We went back to several of our grant funders, both private and family foundations, who give us either restricted scholarship gifts or capital project support for our camp facility, and ask them, in light of COVID and the changes that we've had to make, would you consider removing the restriction on those funds and allow us to utilize them this year for general operating funds to help get us into next year? And we've had a really positive response to that. I think funders understand and they want to support us in the best way that we can. And right now, that's what they can do. So, it's about having that conversation and telling your story and coming from a place of strength and knowing what you need and your clear direction forward.
That's great right now. If we think about, and we're at about our 5-minute warning right now, but if we think about around the corner a little bit, Ted, now we're all hoping for a vaccine and, suppress the curve as much as possible so we can fully open up. But Ted, as we look around the corner, what are some trends that you think we're going to be seeing here for the rest of next year and into Q1 2021?
A couple of things. I think we're going to see some really creative ways to virtually engage donors around events. Mary has already experienced this. I'm sure Christy's planning for it. I think that is going to be a most definite trend. I think we're going to see longer timelines in gift decisions on the major gift level and even on the smaller gift level, from when your appeal goes out to when people actually make the gifts. And that's as we come out, kind of move into the recessionary period as opposed to the urgent need of COVID. I think we're seeing trends in terms of designation of philanthropic dollars. Obviously, healthcare out of the gate was a really big recipient. The social service agencies, particularly food banks, but I think more and more now we'll see organizations that are addressing racial justice and equity. I think basically people are going to be reevaluating some of their philanthropic intents in giving recipients as we move forward.
So really focusing on that type of communication with your community, and letting people know, how that impacts you and your, I don't know, is it stance the right word, or your communication program for that? You think that that's going to be pretty important here?
I think it is. I mean, we're already advising many of our clients who are either in campaign or doing appeals to kind of state their position on it, and how their organization is, advancing people of color or communities of color. We think about a hospital focusing on their community health work, or other organizations kind of emphasizing it in their case development.
Okay. And then with regards to donations, there are some assets that are up this year, and some of them aren't the assets that we're traditionally comfortable with, but I know Anthony and all of his generation is, and that's the cryptocurrency digital assets. Do we think that Anthony, number one, are you and your friends totally comfortable with cryptocurrencies?
I think that totally comfortable is a tough word to put out there for cryptocurrency, but I definitely think I'm more comfortable with it than my dad is. So, if that answers your question.
Well, that absolutely. And what are nonprofits doing today to be ready? Are nonprofits ready to accept those types of gifts?
Well, we've had one, Dean, but it was from the head of our crypto practice at Armanino. So it was a given. He wanted to give his money in crypto.
Do we think that might be a future wave of giving?
I think it has to be an option that organizations are willing to do the work to accept. One of the highest attended sessions at the last Case District 7 conference in San Francisco was San Francisco State's explanation of how they accepted their big gift of cryptocurrency. I think these organizations are being forced into it case by case by their donors, and we are always have to respond to that. So I think they're going to need help from organizations like Armanino about how they can set up the systems and processes necessary to do that. I think it would be short-sighted to not begin to prepare when we get our heads above water a little bit here and start thinking about future giving.
And then just last question here in our last minute is, we have a lot of people on the line that their fundraising strategies are really driven on in-person or event type revenue. What's the main takeaway that they need to have right now, or would you guys give as a best practice to them? I mean, I feel like we've talked about it a couple of times, but if we could drive that point home right now, what would that be?
Dean, I've spent our extra time at home, right? I don't have to commute anymore. I wrote personal notes to every single Armanino donor over the last couple of months. So I can't call every one of them, but I made sure that there was a touch.
I would say, from my perspective, look into trying to reach a greater audience. Everyone's online right now, and it's a really great opportunity to do so. And if you haven't looked into impact investing, also something to look into from your larger donors, reallocating some of their money they might invest in their portfolio to invest at a lower rate to organizations is definitely a growing field.
Awesome. Okay, everyone. Well, thank you so much. We really appreciate all of the insight you've provided, and definitely feel like we've added some value to guide everyone through this next path forward. So thank you.
Thank you all.
Thank you.
So as we prepare to transition into our next session, some questions, and this is especially important for everyone who's doing CPE, but we all know that 606 RevRec got pushed out another year, but we would love to hear if any nonprofits are out there and thinking about still adopting at this upcoming June 30th. And Marie, why don't we close this poll here in a couple seconds? So a resounding 76%, 77%, no or nobody has time for that. To the 23%, good for you for getting that done. But it seems like everybody else is kind of moving forward and focusing on some more urgent types of things. Marie, what's our next? Do we have another question, or are we going straight into our session? Our next polling question is, did your nonprofit receive a PPP loan? Again, if you're hoping to get CPE for today, please answer as many questions as you can. And Marie, let's close this poll here shortly. %74 of nonprofits received a PPP loan. Well, that's very helpful, and that will really help us in our next session as well. And Marie, let's go to our next. I don't know if we have a question or if we're okay. Here we go. Laws and regulations. Here with two of our tax pros at Armanino, Katie Brown and Matt Petrosky. I hope you guys are ready. You know that we're gonna have a lot of good questions here. Why don't we do some quick intros and let's get started.
Okay, I'm gonna unmute myself. This is Katie Brown. I'm a partner in our tax department in charge of the nonprofit practice for the West Coast. Work with many of the attendees that are here on the call today, and very excited to be here with you.
And I'm Matt Petrosky. I'm a director in our nonprofit tax practice. Happy to be here. This is my first symposium. Joined the firm in August and spent my career prior to that in nonprofit tax with the Big Four. So happy to be here. And I have spent a lot of time on PPP. So hopefully the other 26% who did not get the loan, we'll try and keep you interested.
All right. So our agenda today, we'll be talking about a little bit of some of the new legislations with regards to coronavirus. We'll do some things that don't relate to COVID, and then some of the things that we're just not sure about and in the current environment and how we can address those for nonprofits as well. All right, Matt, kick us off. Great.
So obviously you can see a very long list of things that have happened recently. I think this has been a pretty unprecedented year in terms of legislative activity and impact to nonprofits. Hopefully for most of you, many of these areas are not new. Some I'll highlight briefly and really just try and focus on some of the things that we're hearing a lot of and that we're getting a lot more attention from our clients, which obviously we'll start with the PPP. Next. And I think we felt like that picture was appropriate. I mean, this legislation has been ever changing, and I also look at that bucket as kind of where I always put my my pre-planned notes anytime I'm speaking on PPP, as everything is changing, and it's changed this morning as well. So I'll briefly discuss that. But ultimately,
Interim final guidance, I feel like has been the
yeah,
number one phrase that we hear all the time.
there is, and what came out today is the interim final guidance related to interim 6th and 11th guidance. So we're hearing terminology like that. So just trying to keep track of everything has been a challenge. Where we are now, the PPP Flexibility Act has recently been passed, but we don't have any SBA guidance. So I think there's a lot of new information we have, and also still a lot of questions that we expect the SBA to weigh in on. So what I'll do is kind of highlight some of really a few of the key things that we're hearing. One of the questions we have now that the PPP Flexibility Act has extended the cover period from 8 weeks to 24 weeks is, well, I really only need 10 weeks. Is that my covered period? If you read specifically the language of the statute, it's one or the other. So it's 24 weeks unless you received your actual loan prior to when the president signed the Flexibility Act. You can elect an 8-week period. There's nothing in between. So but our hope, and what this is where I'm hoping the SBA guidance will give a little help, where organizations are done, let's say, spending in July, and they want to, and a lot of our organizations, a lot of our nonprofit organizations really want to make sure that they can get the loan off the books. So what we're hoping is that there will be some kind of interim guidance that will give us that middle ground. But until then, it's 8 or 24 weeks. The other question we're getting in terms of bringing back employees is, is the June 30 for the 8-week and the December 31st on the 24-week, is that the date that we have to essentially keep people? Is that the date that we have to bring people back by? And it seems to be at this point, it's a no later than. So we may be able, if ultimately our cover period is 24 weeks and ends in October, that could be the point in time. But again, that's another area where we're hoping to get guidance and clarification. And although we have received interim guidance, the SBA has been good about updating the FAQs, and there have been none updated since the Flexibility Act. And I think the other is kind of the FTEs and how we calculate it. I think you need to remember what full time is. It's essentially 40 hours a week, but you do need to compare it against the 2 periods. You also want to make sure you're running the calculations both ways. Some of your part-time, you can just automatically say that they count as 0.5 employees, 0.5 FTEs, but you want to really go through and do both calculations. Same thing with kind of going back to the 8 versus 24 week period. I think a lot of organizations are asking us that question, and you really have to do the math. You have to see where you are at the end of the 8-week period and at the end of the 24-week period, and see if you really need that extended time. I think organizations generally can take advantage of that 24-week period to maximize, unless they feel like there's some kind of reduction in force coming up where their FTE comparison will go down, or wages compared to the prior year will go down. The other thing, just make sure the Flexibility Act extended the loan from 2 years to 5 years. If you have a loan, you need to go back to your bank and ask. So it doesn't automatically extend your repayment to 5 years. You do need to ask because your loan documents do say 2 years. And then finally, remember the Flexibility Act did have some exclusions against that FTE reduction. So if you are an organization that is in an industry that cannot open up due to government regulations, and think about if obviously we're nonprofits, but if my restaurant can only operate at 50% capacity, kind of bring that also to the nonprofit side, I would not get penalized because I don't have enough staff to cover that, and I don't need enough staff. So I think that's it. I'll mention the HEROES Act a little bit throughout. The HEROES Act was passed by the House. It's in the Senate. There's a lot in the HEROES Act, which means there's a lot that will be taken out, and it won't, if it does get passed, it certainly won't get passed as is. The last I've heard is the Senate won't take that up until after 4th of July. But a couple notes on that related to the PPP. The HEROES Act expanded it to include all nonprofits regardless of size, and also regardless of 501c designation. So I've been getting a lot of questions from 501c6 organizations. Can I apply for the PPP? The answer is right now, no. So I think that's key. Moving on to other programs, anyone who still needs a loan, the EIDL loan program is still out there. It's a loan, it's not a grant, so it's not, there's no forgiveness aspect, but there are additional costs that you can use it for, like AP, that the PPP cannot be used for. And then finally, something very new, I think for organizations that are looking for additional funding, the Main Street Lending Program, it was unavailable to nonprofits. Monday, the Federal Reserve came out and issued some guidance saying that there are a couple programs that the nonprofits can take advantage of. Only 501c3 and C19s are eligible. But and what I do want to highlight is, if you think you might be interested, check out the Federal Reserve site. You have until June 22nd, which is Monday, to provide comments. And if I'm a 501c6 and I'd like to join this program, I probably would comment. So definitely one of the challenges with the Main Street Lending Program is it was based on EBITDA, not a metric that nonprofits used, but they've come out with a way to measure eligibility. So Main Street Lending Program is brand new, or the equivalent for nonprofits. It's a specific program. If you think you have interest, the information is available on the Federal Reserve site, and the comment period ends Monday. So there is a specific email form that you can reach out to. So next slide. So the employer payroll tax deferral, so this was part of the CARES Act. This allows organizations to defer payroll taxes that are incurred through the end of the year. It's the employer piece of it. What it does is it defers it to 50% to 2020, 50% to 2021. And what the PPP Flexibility Act did was updated so that it doesn't have to stop upon loan forgiveness. So this is something any organization can take advantage of. And really it's essentially, it's a cash flow, it's an interest-free loan from the government. I don't know if I've had a lot of clients who have been really interested. Ultimately, you do have to pay it back, but it's there if you're interested in cash flow. I think I've heard some organizations, the board gets a little bit concerned if they're signing off on payroll taxes. But I do think it's something that's out there, and organizations that haven't considered it still can consider. Next slide. The employer payroll retention credit, again, was out of the CARES Act. You cannot have that credit if you have a PPP, and it's really designed more for organizations that have been shut down or really significantly impacted. So think greater than 50% reduction in your gross receipts from the prior year. But it allows a payroll credit up to $5,000 for through the end of the year per employee, to the extent that you qualify. The only organizations.
Yeah, are we seeing nonprofits use this one?
I haven't really seen it, but I think for organizations that haven't received the PPP, they can look at it. Now the HEROES Act expands it significantly, so I think that's something that if the HEROES Act does pass, maybe we give it a little more attention. So next. The expanded unemployment, I know everyone is aware of the CARES Act expanded the unemployment benefits. I'll say the thing I want to highlight them here is, if you're a reimbursing or reimbursable employer who pays the unemployment on a claims made basis, the the Department of Labor guidance that came out the end of April was not favorable to nonprofits. You essentially will have to pay the amount and seek the 50% reimbursement from the state. So the state is not allowed to pick that up. So you're essentially almost having to sort of front load the payment that otherwise would be refunded by the state. So I think that's something that's out there that does get fixed in the HEROES Act if the HEROES Act ends up getting passed. Next. I won't touch on this one too much. The Families First Coronavirus Act, Relief Act, seems like a lifetime ago. It preceded the CARES Act. And what it did do was it required small businesses to provide additional family and sick leave based on anyone impacted by COVID-19. So that's still out there. It's a dollar for dollar credit for the amount you do pay. Make sure that you do not include any amounts you did pay out in that relief, and you receive a credit for it. Make sure you don't include that in any loan forgiveness calculations for the PPP. I want to also highlight the Section 139 disaster relief payments. We're accustomed to seeing disaster relief in more sort of the catastrophic natural disasters, the wildfires, the hurricanes, and it's a way for organizations to give people funds and it not be taxable, especially employees who have been impacted. So COVID-19 has been declared a federal disaster. So this is a way for organizations to provide certain benefits to individuals and employees. I think the one we're seeing is a lot of organizations are looking to disaster relief payments for employees based on some of the new home office expenses they're incurring that they otherwise would not have outside of COVID-19. Best to have a plan, even if it's relatively informal, as to how you're doing the disaster relief, and also just make sure that the individuals are using it for the specific purposes, but you don't need receipts. I think that is one of the benefits.
Matt, quick question here. Can we do the employer payroll tax credit after the PPP loan is repaid?
The answer is no. I mean, the statute's pretty clear. It says you cannot get the credit if you have had a PPP loan. So
Okay.
it's intended to be one or the other. Again, I pay attention to what happens with whatever ends up with the HEROES Act. I think the government has been continually trying to look for ways to provide additional benefits. So I think it is possible. But I think most organizations looked at the two, and PPP was more beneficial to them.
Great. And then one more. Are private foundations eligible for the employee tax credit?
There's nothing that says that they can't. So I mean, the employer tax credits aren't specific to any type of nonprofit.
Awesome. Thank you. Okay.
We're ready to talk about something other than coronavirus.
Now, right? Yeah, we can. Big exhale. All right. What else is going on, Miss Katie Brown?
A whole bunch more. So we have a bunch of new other provisions that have come out in the last few months. So we'll go over them quickly. This is the summary, but if we can go to the next slide, we'll start with the proposed siloing regulations. So Section 512A6 was added to the Internal Revenue Code in 2017 with the Tax Cuts and Jobs Act, and it requires exempt organizations with more than one line of unrelated business income to treat them separately for tax purposes when you're figuring how much tax you owe. So you're not allowed to have gains and losses from different activities offsetting each other anymore. The losses are tracked by activity, and if there are gains on any activity, you'll end up paying tax even if you have losses on another one. So these proposed regulations were issued in April this year and have some additional rules. So first, they clarified that there's no de minimis amount for an activity to be considered separately. If it is separate and you have $1 of income, you're going to report that guy separately. However, for passive investments that generate UBI, like partnership investments, S corps, things like that are passed through, you may group them together if you have less than 2% ownership or if you have less than 20% ownership and lack control of the investment. So it allows you to put those passive investments together, even if one is doing oil and gas and the other is doing real estate. You can group those together and take losses and gains against each other. Another update is that the deduction for charitable contributions has been moved to page 2 of the 990T, so you don't have to try and figure out how to allocate them across activities. It gets applied after you figure out what your tax is. The one thing they did say they will issue more guidance on later is how to allocate overhead expenses between activities. At this point, you have to do your best effort to figure out, how can I appropriately allocate office expenses to these different activities. They are planning to come out with more guidance in the future. One other change from previous guidance that we had received on this that was in the new proposed regulations is that now they have specified that you're supposed to use up your 2017 and earlier general NOLs that can apply to any line of business before you start using your activity-specific NOLs. So they're going to deplete those more valuable net operating losses before you can start using the ones that were generated just by that activity. Pre-silo NOLs can offset 100% of UBI, where the activity-specific ones now are only supposed to be able to offset 80%. But the CARES Act said that that 80% limitation was suspended, and it also allows for a 5-year NOL carryback for tax years 2018, 2019, and 2020. So if you had a net operating loss in any of those years, 18, 19, or 20, and you had paid UBI before in the last 5 years, you can do an NOL carryback and get a refund of those taxes. One final note on these regulations, they specify that the siloing rules do not apply for purposes of the public support test. So the siloing basically artificially inflates your taxable income, that you don't have to do that for the purpose of determining your public support, which is good news. You can still make comments on these proposed regulations. They're due by June 23rd. So if it would affect you, and you want to talk about what kind of comments you might want to submit, please feel free to contact me. I'm always happy to do comments on proposed regulations. We see so much of these affect our clients. So if anybody wants to submit comments and is concerned about any of it, please drop me a line. Can we go to the next slide? Next slide, please. Thank you. So the next topic is our compensation excise tax, some more proposed regulations. So the Tax Cuts and Jobs Act also gave us Section 4960, which gives us a 21% excise tax on 2 types of compensation arrangements. One is when an employee has compensation in excess of $1 million, and then the other is if they have a severance-related payment that exceeds 3 times their normal compensation. So earlier this month on June 5th, so all of this is like breaking news, the IRS issued the proposed regulations. And there are a lot of details, but the main issue that everyone was concerned about was the rule that you have to consider compensation paid by related organizations in sum when figuring out how much the employee earns. The concern there is that corporate executives or corporate employees who volunteer at a corporate foundation would have to be, the foundation would end up paying taxes on compensation that was actually related to what the corporate foundation or the corporation paid. So the new regulations first say that a director or a board member is not considered an employee for this purpose in their capacity as a director. So if you're just a board member, you do not have to be considered an employee of the exempt organization. If you are an officer, you are considered to be an employee. So if you're the president, the vice president, the treasurer, the secretary of the exempt organization, you do have to be considered an employee unless one of 3 exceptions applies. And these are a limited hours exception, non-exempt fund exception, and a limited service exception. And I will go over these super briefly. The limited hours is when an employee of the foundation does not receive any compensation from the foundation and performs less than 10% or less than 100 hours of their total work time for the foundation. So it would be, a volunteer, a company employee who's volunteering to help work on the foundation. The non-exempt fund exception basically says the employee is not paid by the exempt organization or any related exempt organizations or any controlled entities of the exempt organization, and they spend less than half their time on the exempt organization. So in the example of a corporate foundation, assuming that the company controls the foundation, not the other way around, if the employee spends less than half their time on foundation business and is paid only by the taxable company, then the exception is met and you don't have to consider them an employee of the exempt org. The limited service exception is pretty complicated. It's one where you work for multiple exempt organizations and the one that you're filing pays you less than 10% and another one pays you more than 10%. If you think you might be in that situation, give us a call because it's pretty complicated. And we don't really expect it to affect a lot of our clients because not a lot of people, even combined, are paying their employees more than $1 million to work in their exempt organization. But if you have, for example, a 457F vesting event, that does get pulled into compensation for the year. And so it could be a large amount that could push them over the $1 million threshold. And so if you have any of that coming up, please reach out to us and we'll be happy to chat. And we don't want to forget about the excess parachute payments. So any payment connected with involuntary separation from service has to be considered. And if the total payment exceeds 3 times the employee's normal salary, the tax is on the amount that exceeds 1 times the employee's normal salary. So my normal salary is 100 grand. I get a $500,000 severance payment. The company owes tax on $400,000. So it's pretty impactful, and we know that we've seen a lot of involuntary separations recently. So if you have some major severance packages, please feel free to reach out to us on that also. Can we go to the next slide? So donor disclosure for non-501c3 organizations. There's been a little drama out there about who has to provide donor names and addresses to the IRS on Schedule B. And so the IRS attempted to issue regulations last year, but because they skipped a procedural step, it got kicked back by the courts, and now they are finally issuing the proposed regulations for this year. And basically it says that only 501c3 charitable organizations and 527 political organizations, which are those that are required by statute to report it, have to report it. Everybody else gets to pass and gets to use a redacted Schedule B when they submit to the IRS. So you have the amounts, but you would not have the donor names and addresses. And the concern has been that foreign organizations or governments could influence US elections by flooding money into non-C3 organizations that then ends up in paying for election campaigns and ads and things like that. But with issuing these regulations, it seems like the IRS is kind of distancing itself from regulating election funds and things like that and saying we're worrying only about income tax issues. So it's been a little back and forth, but they're basically saying that non-exempt contributions are not something that they need reporting on. Next slide, please. So we're finally going to get a 990T e-file requirement. The Taxpayers First Act, which came into effect July 1st, 2019, requires e-filing for exempt organization returns generally. The 990 and 990PF are required to be e-filed for tax years ending July 31st, 2020 and later. And this shouldn't be a big deal for the vast majority of our clients because we're already e-filing. It's way more convenient and faster. However, the 990T is not yet available for e-file, and it will still be required to be e-filed beginning in 2021 for tax years 2020 and later. So the IRS is working on updating its schema now to accept e-filed 990Ts. But we think that this will increase processing speed and accuracy and that refunds will be issued more quickly. So this is an exciting moment for us to welcome the IRS to the 21st century and accepting e-file for all forms. So very good. Next slide. So the California Attorney General, if you are an organization that either solicits contributions or has charitable funds in California, you file an RRF1. There is now an online option to file your return and to pay with a bank debit instead of writing a check. So this is a great way to avoid paper, having to process, having to go to the mail. This is in effect now, and if you would like to be able to do that, just let us know on this year's return. This just came into effect earlier this year in the spring. Next one. Very quickly, we wanted to mention the ASC 606 implementation has been deferred by a year. So you would have been required for 2019 fiscal years to implement the revenue recognition change, and it's now been pushed back if you have not yet issued your financials by June 30th, 2020. So if you early adopted, you have nothing to worry about, but nobody had time for that, as we saw earlier on the polling question. So now we're allowed to procrastinate, which is great. Just a really small silver lining to a really tough year for everybody. And just as a quick closing note, we've gone through a slew of legal and regulatory issues this year. It has been really tough for organizations to continue their operations. Things have been very unpredictable, and the changing regulatory landscape certainly doesn't help. But we're here to help you, and we definitely hear all of the challenges that you're going through. And if there's anything that you're worried about, or that you're worried about the impact on your organization, please feel free to reach out to us. We're always very happy to help. That's all we have. I think I am like 1 minute over. Not bad.
Yeah, and with that, we'd love if there's any questions that that anybody has. Go ahead.
About anything except the PPP.
By the way, Dean, I will jump in and say I think when I talked about some of the changes and what's happened today. So there are new loan forgiveness applications on the Treasury website. One of them is new, which is an EZ form. I think those of us in the nonprofit world are used to the 990 EZ. Same thing on the loan forgiveness. So essentially, if you're an organization that does not have any FTE reduction or any wage reduction over 25%, you may be eligible to file the shortened version. So I think that's positive. Anyone who's interested, it's on the Treasury website. Very easy to get to. It's that red banner that's related to PPP.
Awesome. We do actually have a question that came in with regards to severance packages, Katie. And it was, if the severance package is 100% of pay and they were working as a 20% FTE in the last month, is there an excise tax?
So the base compensation, and I'm sorry about the background noise here, a truck pulled up. The base compensation is based on the past 3 years average. So if they had been reduced to 20% and now they get a severance, we would be looking at the base period as an average of the last 3 years. So that is probably a lot safer.
Okay, thank you. Thank you for that clarification. And if there's any other questions, go ahead and let us know real quick. If not, we might be transitioning to some polling questions here in a couple minutes. Okay, we'll transition to some polling questions. Thank you so much, Katie and Matt, for your expertise and insight.
Awesome. Thank you so much, Katie, Matt, and Dean. Our next polling question to get us ready for our next session is, I have a vast understanding how technologies like AI can improve my nonprofit efficiencies. True or false? We'll go ahead and get our next speakers up on video here. And as a reminder, we had a few questions come in. We are recording today's event, and we will provide the slides and the recording within 48 hours of today's presentation. And we'll go ahead and close the polls in 3, 2, 1. Okay, so it looks like most people said false, so you're in the right place. There's some really great people here that are going to talk about it. Before we hand it off, we have one last polling question. And the question is, how often do employees in your organization request reports from others for reviewing? So daily, weekly, monthly, quarterly, or I don't typically review or participate in reporting requests. So go ahead and let us know where you are in that process. Okay, and we'll go ahead and close the polls in 3, 2, 1. Okay, so it looks like most people are in that monthly time frame there. We'll go ahead, and our next topic is advanced topics to improve efficiencies. Looks like our speakers are all on video, and I'll hand it off to them.
Thank you, everyone. Thank you for inviting us to this event. My name is Pippa Rakem. I am part of the RAS practice, the Risk Assurance Advisory practice, and in a senior manager role, and driving privacy compliance initiatives for the practice. We will kick off this segment with a discussion on data hygiene. How are you managing your donors and employee data? There are great technology to leverage in the marketplace to drive insights around your data. But before we get to that point, you need to have your house in order. Next slide, please. So when we consider data hygiene, we're looking at how your organization is managing information that it has. We're looking at what practices you've implemented around the information that you have. We're also looking at why is it important for nonprofit organizations with the slew of regulatory changes and all that is happening given the current environment. It really drives the need to understand the data that you have and to consider how to go about improving, enhancing the practices around the data that you have. Next slide, please. One thing to keep in mind is that there is no one-size-fits-all approach when it comes to having answers to your data hygiene needs. Organizations are different in terms of what organizations do with their information. And you also have to think of the local rules that apply to your information processing activities. Next slide. So when it comes to trends we're seeing in the marketplace, a lot is happening for non-for-profits. For non-profits like corporations, you are awash with data. You do have information that includes personal, financial, employee information. And like corporations and other entities, there is a struggle to know how to handle all of that information. There is also questions around having to safely handle and store the information. Where is this data being kept? Is information being stored in cabinets, on network servers, or in the cloud? Depending on what you are using, depending on where you are leveraging to store your information, there are risks presented around those activities, and trying to get at and to understand exactly how to mitigate those risks presenting a great amount of challenges, not only to corporations, but also to nonprofits. If you are a nonprofit conducting online business or offline, do you know what your danger zones are when it comes to processing payments online, transferring personal information via email, storing information on laptops, on smartphones, or giving access to your vendors? Again, we're looking at the trends we're seeing out there and what the challenges are for organizations, for nonprofits, and why there is need to have good data hygiene. Another point to bring up is when it comes to decision making on where to donate, whom to donate to, it's very different from choosing a product or service. It's not exactly the same. When it comes to donations, it's more of an intimate process driven by personal goals and personal considerations. So in these trying times, understanding your donors' personal motivations for giving should be at the heart of your fundraising activities. And to support that, you would need to have an accurate profile of all your donors and why they are giving and where they are coming from. It all helps towards good hygiene. And then another thing to consider in terms of trends is that nowadays there is a shift from relying solely on empirical knowledge of employees and relying on complex spreadsheets to guess at what messaging to send across to raise the most funds. This is what was the old process, and it can be very labor intense and not allow for creative ideas to come forward. So again, what are you doing in your organization in terms of your data hygiene practices? Other considerations that we're finding, other trends we're finding is when it comes to the information that you have, are you collecting more data than you need to achieve your business objectives, to achieve your business goals, and to drive your strategies? We're finding that just as corporations, nonprofits are really having a challenge keeping up with having data that is focused and relevant. So when it comes to collecting information, do you have a governance structure in place to specifically account for what your organization needs to drive its business goals? Is it organized? Is data organized in such a way that makes sense to support your intentions? Is it visualized in a way that is easy to understand? These are all some of the challenges and considerations that should be going on. Lastly, we see that many organizations are having a real issue with trending, analyzing information over time, with knowing how to test their fundraising efforts, with actually understanding understanding their donor segments and knowing how to improve the outcome. I mean, this is all part of, driving towards a good data hygiene practice that would allow some of these issues to be resolved. Can we, to the next slide, please? Move to the next slide. So what is data hygiene? The definition is across the spectrum, and depending on whom you speak to, if you are dealing with an information specialist or you are dealing with a data privacy professional, or you are dealing with anyone in a different role that has a different need for data, definitions are different. One thing to take away from this slide is that it's a lot more than scrubbing the data you have. Data hygiene is, in my mind, and how we practice, it's a collective, cohesive effort. It involves an analysis of your data, knowing what data you have, knowing where it resides, knowing who has access to that information. It also involves being able to classify your inventory based on business critical uses. So are you collecting this information to meet your regulatory compliance obligations? Are you collecting this information based on business practice? Are you needing this information simply because you think you should have it? Well, thinking that you should have it is not a legitimate reason. to have information in your repository. So you may want to think of having a process to get rid of that information. We're also looking at how do you build compliant practices. So it's not just a one-off exercise when it comes to data hygiene. We're looking at ensuring you have the resources and you have the training in place and the monitoring and evaluation in place to allow for compliant practices. It also includes securing the information that you have in a secure location and having restrictions around that. So again, data hygiene is the comprehensive data handling practices that you have initiated and implemented around your information. Next slide, please. So there are key components when it comes to data hygiene, and the three are outlined on this slide. It involves people, it involves processes, it involves technology. When it comes to people, we're looking at having stakeholders. Those who come into contact with your information need to be involved in any type of strategizing work that is done around your data. You need people to be accountable to the processes that you eventually implement. When it comes to process, we're looking at procedures, we're looking at policies, we're looking at training that you provide around your processes. We're looking to seeing mechanisms in place to allow you to monitor compliance, to evaluate your controls, to allow for any enhancements in the future. Technology, we're looking at technology to take away or replace your manual processes. A common use case is in the data protection arena. There are regulations that sometimes extend to non-for-profit. So if you have a donor that residing in Europe, there is that mammoth regulation called GDPR that you will have to comply with if you're collecting their personal information. And to allow you to do that, you would need to have some sort of program, privacy program in place. And that requires that you have people, you have the process, and you have the technology to support and respond to your compliance requirements. Next slide. So what are some of the steps that you need to have in order to begin to plan for or have to begin the journey, your data hygiene journey? The beginning point is having an inventory. You need to have clear understanding of what you have. And a good way of leveraging that is technology. There are many that are out there, and the subsequent presentations will go into more detail, but AI is a good way to leverage that technology in scanning tools that can be deployed on-prem or in the cloud to help account for your inventory, personal data inventory. You need to be able to understand and clearly map the industry standards. What are the standards that apply to your data processing activities, your initiatives? And what are the best practices around those standards? And how can you implement them in your environment? You don't have to have a one-to-one sort of matching, but as long as you have something that is measurable and that can be communicated, repeated, and honored by your employees, I think that's a beginning point. You need to identify your information. So in the privacy space, we typically complete a data mapping as part of our inventory exercise. Data mapping allows us to map the business use or business purpose of any data that you've collected that is personal to a business process. And that's a requirement for many privacy regulations. And keep in mind, even if you believe that your organization currently does not have to meet another mammoth regulation, CCPA, the California Consumer Privacy Act, keep in mind that eventually there will be federal regulation around privacy. And so rather than wait until the very last moment, it might be a good time now to get your house in order and begin to actually map your data to your business process. When it comes to the issue of how much data do you have, in the privacy space, it's more of a data minimization practice. Don't collect information that isn't useful to your business goals and to your business strategies. There's no need to have that. So if you have donor information that it's no longer useful, I mean, if a donor is no longer contributing to your initiative, and you believe, based on your trending, all the records that you have, that this donor is, should not have their personal information still as part of your trove, you need to have a process to safely and securely dispose of that. But going back to the need to only collect information that you need, you can adopt systems that minimize the information that you collect. And you can adopt solutions that map out the information that you collect, that assign retention periods to the information that you collect. So you're not exposed unnecessarily to what you don't need. Again, depending on where you operate, if you have donors out of the EU, GDPR does apply to both for-profit and non-profit organizations. So you may want to investigate further on where your donations are coming from. Speaking of storage, nowadays data centers are spread across the world. So being able to know where your information is stored is key to safely managing and securing who has access, and making sure that the right language, you have the right contractual language included in your third-party contracts, and making sure that you do have that audit right to go in and investigate and review or request to know the controls that they have or they have implemented around your information, and to be able to map that to your controls, and to be able to communicate any gaps to them, and work on improvements on enhancing those controls. Very critical. And when it comes to access to your information, not everyone should have access to information. You should have policies in place to govern that. Type of record, again, going back to data classification and making sure that you have policies in place for that, and retention as well. Don't keep data indefinitely. You need to profile your donor data, and it needs to be relevant for your purposes. Train your employees on policies. All of your activities, all of your initiatives, all of your efforts would be wasted if your employees are not aware of what they need to do and how to go about achieving your business goals, and how to build donors' trust. Monitoring compliance and tracking legal and industry trends, those are very critical. You need to monitor the behavior, you need to monitor changes over time to the practices that you have in place, and you need to be able to track the direction of new requirements. As privacy laws evolve, they will have impact, inevitably have impact on how you collect and what you do with your donor and employee data. Thank you again for having me, and good luck.
Awesome. Well, thank you, Pippa. That was great. So my section today is really around how can we use that data that Pippa was just discussing from an artificial intelligence context. And really, some of the things that I want to point out here on this next slide are that, A, data really is an asset in today's business organizations, right? As we enter into the fourth industrial revolution, data on our balance sheets is either being appreciated or depreciated, and it's all based on how we're actually using that data within our organization. And so first and foremost, when we look at data and analytics, we should always be looking at it as a journey. And this staircase does a good job of representing the different stages that we need to move through in order to properly leverage, clean, process, and report on data as we move through this the different stages. And so one of the things that's really important here, because data and analytics, this journey is often overwhelming, we wanted to kind of simplify it back to 3 key technologies that we believe are beneficial for your organizations, and then go through some use cases of how we might be able to use those. First technology that has become foundationally important in this fourth industrial revolution of data and analytics is machine learning. And machine learning, on the next slide, was actually coined in the year 1959 and has gained vast more notoriety in recent years due to computational power improvements. It enables systems to automatically learn and improve from historical data without the need for explicit programming. Things like predictive analytics, or as some of you may have heard in the media, deep learning, are all intimately ingrained within the machine learning context. The next tool or technique that we would like to discuss is on the next slide here. Cognitive computing, which is really built on the foundation of machine learning, but takes it to the next stage, right? This is kind of like the next evolution of machine learning and allows for the simulation of human thought processes so that we can more actively engage with our human counterparts, or so that machines can more actively engage with their human counterparts. Things such as knowledge graphs and virtual assistants, our Siri, Alexas, these rely on cognitive computing in order to understand human requests, process that information, and then respond appropriately. Last but not least, from a business context, robotic process automation enables organizations, next slide please, enables organizations to automatically configure, capture, or interpret information from existing applications, and then manipulate it or trigger some action to communicate with another system and complete a task. Often these are referred to as swivel type tasks, where information is commonly being communicated from one system to another in a very repetitive and laborious fashion. What we can do with robotic process automation is replace some of those manual efforts that are done by our employees by a bot or the computer system, the robotic process automation, and allow our employees to focus on more strategic and valuable business activities. So now that we've kind of seen the 3 main technologies we would like to discuss today, what we really want to do is understand how to apply these in a business context. And that really comes down to 3 steps. First, we want to be able to capture data, like Pippa was discussing earlier, and how we do that. We want to be able to learn from that data. And then ultimately, we want to be able to act on those insights from those data in order to improve our businesses. So just tackling that first section of capturing data, how do we use AI to capture data? Well, often we think of data as already being digital. We think of tabular formats, our Excel sheets, but there is a host of other data out there that is unstructured, right? This could be our receipts. This could be handwritten documents. It could be something from 1984 that's sitting in the back cabinet that you need to scan and process and digitize in order to be able to see if there's any usable information within it. And so some of these techniques that I've shown on the screen here, optical character recognition, voice to text, knowledge graphs, these are ways of organizing or extracting information so that we can benefit from that information in a more organized fashion. So perfect. When we learn, once we've extracted or captured that data, we now want to really learn from that data, right? And this is where AI, as most of us have become comfortable with the concept, is really applied. Some concepts here are sentiment analysis, or being able to rely on machine learning and natural language processing to extract the context of what is said by a human. The next thing, or next great application of artificial intelligence, can be segmentation or clustering, which allows customer data to be compared to larger populations in order to segment the customer base according to similar behavior or characteristics. We can also look at regression analysis, where we're looking at numerical outcomes. This relies on historical training data in order to predict a future outcome based on current inputs. And lastly, we can look at classifications. Classifications are used for categorical outcomes and rely also on historical training data to predict a future state based on current details. Once we've used some of these techniques, however, to extract and learn from our data, we really need to start thinking, how will we act on that data to improve our business? And on the next slide, we'll give you some tangible examples of how that can actually be done. So one common example of how artificial intelligence can be used to benefit your business once insights are extracted is through recommendations of products and services. This is really common throughout the modern internet age, where companies like Netflix will recommend movies or TV shows to you, or even Amazon recommends products to you based on your purchasing patterns in the past. Sentiment analysis is now a common tool for understanding how customers and employees' feedback can be leveraged to improve your customer satisfaction or employee satisfaction. So products and service reviews on Yelp or Amazon, or maybe even just a sentiment analysis on your blog posts or your webinar content. All of those can be used to extract meaningful insights that can then be taken back to your managers to improve upon how we're handling our customer interactions. We can also use artificial intelligence to improve our resource allocation. We can imagine a situation in which a supply chain management can be optimized for inventory control, or how a sales and budget forecasting can be used to improve staffing. Or we might be able to target market a little bit more effectively, maybe provide the right message to the right individual in order to improve our marketing conversion. So now that we've kind of seen a few examples of how we can act on these insights, I wanted to leave you with a little bit of tangible advice on how to objectively look at your organization to identify where artificial intelligence could potentially be applied. And this quote actually comes from Dr. Lisa Rao, who is the founder of Fianta and a leader of the artificial intelligence community. And identify processes in your organization that create or consume large amounts of data. These processes are often repetitive or predictable, requiring significant effort to consolidate, and analyze disparate data sources. So instead of looking for maybe necessarily a problem, sometimes it helps to look at your organization and where the troves of data exist, and to understand how that data got to be in that state and how we can start leveraging that data to improve our organization. Now, we know artificial intelligence is a very challenging topic. It's not simple to wrap your mind around, and often we try and demystify or simplify this topic as much as possible. But Armanino has actually created an AI lab to kind of help guide our customers through this process. And so before I transition over to OJ here, I just want to leave you guys with a quick bit of information that if you ever need any help or assistance, you can join our free artificial intelligence laboratory, where we will help provide content and information, one-on-one meetings, and ways that we can improve upon how artificial intelligence is leveraged for your organization?
Thanks, Derek. That was fantastic. And it's, again, I think we laid a great foundation for what we're going to talk about here. Now, we would be remiss if we had a conversation about efficiency and I didn't give you a very quick and efficient way to start utilizing all the information that you're taking in. So we had some really high level conversation about what we're going to do with that data when we have it and the advanced AI techniques. What we're going to do today is talk about, what is the data itself that we have access to that's available to us, and how we have some real tangible examples of using both our own data, internal data sources, and external data sources to be able to see those applications in a quick dose of reality. And then again, why all that foundation is needed to ultimately bring out the higher value. So we can go to the next slide here. So that's a big number. 2 quintillion bytes of data are created each and every single day. For comparison's sake, that's, I think, 350 million centuries of time if each of those was just 1 second. Or in other terms, that's also the number of days that I feel like I've been stuck inside this apartment. So it's a huge amount of information that's just created. It's almost incomprehensible. That being said, when people usually hear these statistics about data, there tends to be an ominous feeling to it, or that's inherently a bad or scary thing. And that does not have to be the case. The use of big data, which again is just using broad applications of large amounts of data, it's linked to an increase 8 to 10% in profit, and right there's efficiencies and a 10% decrease in cost. And it's something that, it's inevitable. We are creating this information, and it just becomes a matter of not being something we're worried about, but how are we going to start utilizing that today? And again, for all levels of organizations, just because there's such a massive amount created on the global scale doesn't mean that there aren't going to be very specific applications that we can look at. So let's go to the next slide here. So to pull back up what we were looking at before, and again, iterate where we are, right? We looked at the data needs, what's going to be required on the data hygiene side, and how we're going to kind of create that foundation of what we're going to build. Derek just went through some of the analytics and some of the advanced technologies that's available today. And again, trickling down in a way, something that might have seemed not approachable 5 years ago, even a year ago, is now making its way into more and more practical applications. What I'm going to talk about today is really just even the base part of it. And it's something that most groups and organizations have some experience with, some use case with. And that's just using those reports and KPIs, trying to gain just intuition and even a little bit of insight into that data. And looking at what data sets are probably available to you right now and what we can start doing with them immediately. And I give you some other real life use cases too. Some I think are more obvious and some that are probably not the way you think about utilizing this data, just to start getting your mind thinking about all the choices that are out there. So I think there's a couple key things we're doing with all these different data sources, and it's really looking at how do we increase the velocity in the information that we're gathering and the accuracy of that. So velocity, I think, is incredibly important. People tend to think that all this information is created and lives in a vacuum, and that's not true. You're probably accessing a lot of this information already. It's just cumbersome to get. It's siloed, who has access to that information, and it's just not very efficient to pull it out when you need to update those reports. I think we looked at monthly reporting was the poll question at the beginning of the class. And even then, it probably takes so much time that you really could only do it monthly, and only I think 30% were doing that. So how do we make sure we get that information out, in a faster way? And then how accurate is that information, which ties a little bit to velocity, because we want to talk about how up to date it is. Is the information that you need? Is everyone in the group referring to data in a specific way? Oftentimes you're going to have a lot of different places that you might mention a volunteer, and is it always one-to-one? Is it donor one-to-one, depending on the different systems that we have? How are we doing that? It's probably tools that you're already using to a certain extent. I'm sure everyone here has a ton of experience with Excel. And if you're doing that, you're already stepping towards part of this process. Now, again, granted, obviously, there's a lot more available on the higher end. We're going to look at some examples that are going to use visualization tools, things like Power BI. Things like advanced, and again, this goes to some of what we just spoke about with the AI tools, where we have a lot more advanced capabilities. We want to house that data probably in a central location, but there's a lot of tool sets that, quite frankly, you probably already have, and you can even start with the very simple reporting capabilities of the software that you're already using. So that being said, let's say we want to start utilizing that data. There's really kind of the two key types of information I'm going to go over today. And one is that internal data, as we're going to look at right here, and then the external data. So I love this quote. Obviously, the highest type of efficiency is that which can utilize existing materials to the best advantage. And that's 100% true. Every organization is creating a ton of information already as it is. You know, it's in your ERP, it's in your CRM, it's in your management software, shelter management, volunteer management, whatever it's going to be, grant management, everything is already there. And it's always going to be nice because that's going to be germane to you. It's always going to be very specific, and it's going to have the application that you know you can use, and you already have it. So there's no cost in acquiring that data. There's no worry about other concerns. You're going to have it available to you. Now, the con, of course, is that since it's yours, and unless you're keeping good hygiene and good structure on that information, it could be a little difficult to use. So this is where doing our homework helps us, and doing a little bit of pre-work here, helps us utilize this information in a way that's going to be extremely helpful. I think these are the types of projects that you can kick off almost immediately. And it's something that everyone can do. You know, it doesn't have to look as pretty as it does in that picture. And of course, we're happy to guide you to get to that point. But the point is using the information that you have is absolutely critical. So let's look at our first example of where I think this is broadly applicable here on the next slide. You want to skip one forward here? So we're looking at a 990 dashboard. You know, we spoke about earlier how the IRS is changing processes to make them easier to file, and it's fantastic. But I think it's a great example of the type of process that is a quick one to identify as a place to increase efficiency. It's something that you know you're going to have to do. It's a repetitive process, so there's not that many surprises. And it's something that brings relatively low value. It's something that we have to do, but it's not necessarily something that is the time we'd rather be using for that as opposed to analyzing the information. So I think the easiest starting point to think about how we can use that data internally is just to make a dashboard. And I'm going to be agnostic to the platform that you're using or where your data lives. But most ERPs and systems that you're tracking the information you'll be pulling these reports for anyway have the ability to have these custom reports or have some of them pre-built. And all I'm suggesting is let's build out those reports in a structured fashion so that you're already going to have the information you need when you do that filing. There's no reason why this can't be done and then kept up automatically by using reporting tools and pulling off of that data that you already have to have it available for you. What that does is by the time you actually do have to fill it out, you've already done the work throughout the year. It is available for you. And then you can quickly utilize your information to fill that information out and then keep on going. And it's something that's directly applicable to, again, any repetitive process. That could be a monthly report, for example, too, using just those reporting tools to the fullest that you already have. And again, it sounds like a far cry from setting up, you know, when people think of AI and Watson, and sure, this isn't quite there. Maybe we're doing some simple integrations, manual exports, imports, but this is the kind of stuff where you can immediately add to that efficiency. And again, I mean, you can start tooling on this afternoon before dinner. So let's look at the next example here. So then we talk about external data. You know, it's great and valuable as internal data can be. There's obviously issues with it. One, it might not be in a great state right now. If you don't have great master data management, it could be all over the place. There could be different parts of information. You might have systems that are hard to access. And one of the key benefits, especially in this vertical, is that there's a ton of external data available for free. There's a lot of public filings, and especially in the nonprofit world, there's actually a ton of information you can access. But even beyond simply government records and things of that nature, the world that exists, and again, to the 2 trillion bytes of data that we had, there are, you know, countless numbers of data sources that you could use, and you could track everything from people's movement in your area to the actions of everyone else to verifying the records, as we're going to see here in a second. Now, external data sets do come with a cost, typically, or, you know, possibly, so there is that aspect of it, but again, it gives you an instant boost, and it allows you to extrapolate what you have and do better predictive work, because now you're pulling in not just what you have, but other sources. So I have an unusual use case I think is interesting and can kind of get us thinking of ways you might be able to use that data. So here's some national statistics here on fraud in nonprofits. And again, fraud's probably not the first place you're thinking of when you're thinking about how you're going to dashboard and try to increase your own efficiencies. But I think it's a great example. It's obviously a pervasive issue. Median loss are $75,000, with the average being $640,000. The other thing that happens is, in these uncertain times, we are ripe more than ever for fraud to happen. So it's obviously a key issue and something that we all need to be wary of. But by utilizing external data sources, what we can actually do is lower our risk to it, but just automate that process to make sure that we're using our own information in a way that can slow it down and then allow us to quickly find these issues and save us a ton of time by rooting them out from the beginning if they exist. So let's go to the next slide there. So what we're talking about here is anomaly detection. And in this case, what the external data set actually did is we verified if vendor information was accurate, if your volunteer information was accurate, if you need to see if your employees actually had real information, do the addresses, are they mailable to? Are the social security numbers valid? Have they been used fraudulently in the past? Same with the phone numbers. Do we know if the phone numbers for the vendors or employees have imported? Things of that nature. And again, you might have found these things naturally by due course, but what we can do is by utilizing external data sets, you're able to run that against your own information and immediately get that return back, which speeds up that process, weeds out the issues, and it puts you in a position that is getting you ahead of the game, quite frankly. And again, the application of external data sets is absolutely limitless. I mean, looking at the COVID tracker and things like that we have now, it's incredible. The amount of information that you can gather and that people are capturing now is you can really get it down to, are people staying at home or not? And I'm sure you've all seen the dashboards and different types of information, but there's so much external data that you can apply that I think it's a very broad use case that really any process that you're doing, there's probably a matching data set that can help speed up that process. So in closing for the efficiency group here, I mean, as far as, what we see as a foundation or key first steps, I mean, I think there's a couple pervasive, strings here between everything we're talking about. One is to realize that whether you like it or not, you're in the data business. You have a lot of it. You need to take care of it. Keep that information secure and be wary of the risks that it could have by not taking accurate care of that. That being said, we got to make sure we're looking at it as an asset, because we know that those AI solutions are not that far out, right? It is 2020, and that availability and techniques are here, and it's something that we should start thinking about very seriously and building that data up in that way. And lastly, let's make sure we're using it today in a way that's effective. We have the ability to do it, and there's no excuse or no reason why we can't start increasing that efficiency, especially right now where we're being asked to do more with less. And it's absolutely the perfect time. We're remote working and remote everyone else too, to start thinking about how do we leverage this data and information in a way that's going to be more effective. Thanks, everybody. If there's any questions, or if we're on to the next section here.
We're going to go ahead and move on to the next section. Thank you, OJ, Derek, and Pippa. We really appreciate it. We're going to go ahead and launch our next polling question. Great. And the question is, does your organization have a plan on how to market during a crisis? Yes, no, or not even sure to where to begin. And this is going to help us transition into our next section. And we'll go ahead and close the polls in 3, 2, 1. Let's see what most people said. So it looks like most of you do have a plan in place, which is awesome to hear. And we'll go ahead and start our next section. So our next session is communications in time of crisis. And here to speak on this is CEO of AMF Media Group, Vintage Foster, who has a long record of developing companies to profitable and significant sustainable growth. And before I hand it off to Vintage, just a quick overview of AMF. AMF is a subsidiary of Armanino, is a full-service integrated agency with capabilities in marketing and brand strategy. And since founding AMF in 2007, Vintage has opened offices in San Luis Obispo, Los Angeles, San Francisco, Dallas, and earlier last year, Vancouver. So with that, I'll hand it off to Vintage.
Good afternoon. We're gonna kick off, and they can see okay? Because I can't see. I'm just doing am I on here? We're just doing a technical check here. Bear with us. Okay, so the best place to start with this is with an apology. I owe your host, Marie, an apology. Marie came to me a few weeks ago and said, here's what we're hearing. People really want to sort through how to market during this crisis. And, you know, I might have bit Marie's head off a little bit because I'm a classically trained crisis management professional. And what defines a crisis is very specific, and we're going to get into that. But the truth is, after Marie asked me this or suggested this, I probably have had this question come up about 50 times. So, Marie, I'm sorry. You were right, and I was not right. I can't say.
I appreciate that. I appreciate the honesty.
So let's move forward because I think I'll show you why I got this wrong, quite frankly. And I'm a person who spends a lot of time in this space. So this is a bit baffling because what's happening right now in our society is we're really talking about a number of issues being lumped together as one. And so let's deconstruct this. Can we move forward one more slide? So, and you can click on there. Okay, go ahead. So here's what we're really talking about, okay? A true definition of a crisis is when your brand is under direct assault, okay? I would argue that most of you, what you're dealing with is the second, going through the second door, which is there's a tremendous amount of market uncertainty right now. And how do I deliver my service? How do I provide value in a market where first we have COVID, and then we have civil unrest? How does one serve? And so one of the most important things you can do as leaders of your organization is separate these two doors and say, what are we really talking about? Now, I will also tell you, sometimes it's not this black and white. Sometimes market uncertainty will also lead you to a place where your business is threatened. And so you have to act as if it's a traditional crisis. But the difference between the two is there a concentrated direct assault on my brand? And so I want to walk you through a couple of examples so that we can see it. Now, I'll tell you the first thing is this. I would say 90% of you are dealing with the right side of this slide. Market uncertainty and what's it mean to your business. I will tell you the left side is probably the sexiest thing to talk about. People love walking through crisis communication. So I'm going to take the first door, walk you through an example of that, and then I'm going to come back to what I think the majority of you are focused on. So let's move forward. Okay, when your brand is under direct assault, this is a very disciplined approach that we use to solving a crisis. And people ask me all the time when I give these presentations, why do you share these questions? Then we can do it ourselves. No, you really can't, because when your brand is under direct assault, you're anxious, you're fearful, you're concerned about what the right way is to go. You have outside pressures, you have board pressures. So you always want to have a third party who's disciplined, who is not emotionally tied to the organization to go through this. But let's go through this together. So I'm looking at my screen to the right. So who can be harmed? Let's say we are in the food business and we have an E. coli breakout. Okay. In that case, if I am in the lettuce business and I have E. coli, who can be harmed? Well, first and foremost, the consumer can be harmed. Who else can be harmed? Well, the company can be harmed because the company will lose revenue. Who can be harmed? Most of those employees are hourly employees. If I have to stop production, those folks and their families can be harmed. Who can be harmed? My vendors, the trucking businesses that I partner with. So you get the idea. You start to identify every stakeholder there is and how and who they are. Second question, how can they be harmed? Well, if I'm a consumer, I can get sick. I can be harmed because I'm hospitalized. I can, worst case scenario, I can pass away. I can die. How can the company be harmed? Well, our revenues go in the tank. Oh, by the way, we're in the food business, so we can receive massive fines. My employees can be harmed because they don't have a paycheck, therefore it affects their ability to live, pay their rent. These are folks who mostly work or live paycheck to paycheck. And so and the vendors, my relationship with my vendor may be forever harmed. How do we limit harm? Well, you get the idea. So this is how you approach the traditional definition of crisis management. So I'm going to skip number 3 because we're not actually doing a case study on this, but I want to spend a second on the 4th question, because I'm surprised at how many times our clients will say, can we turn this negative into a positive? The truth is that you can turn a negative into a positive on a short-term basis about 5 to 7% of the time. And you really should not have that as a goal. You can, however, turn how you manage this into a long-term positive, because if you're in the food industry, eventually your brand is going to go through something like this. And consumers have long memories. So if you handle it right, and if you are transparent, and if you put the consumer first, if you treat that employee as a true stakeholder, then in the long run, you will win. But you should not go into a crisis saying, within a couple of weeks, how can we turn this into a positive? Now, I'm going to give you one of the great examples in our current everyday life around a crisis that hit a brand. Let's move forward. Let me introduce you to, and I don't think I have to introduce you to, our old friend, Central Park Karen, otherwise her real name, I think, is Amy Cooper. So Franklin Templeton is going about its business in COVID. It's managing its clients' portfolios and the things that you would imagine Franklin Templeton to do. And imagine when they start getting phone calls about Amy Cooper. Now, if I remember correctly, their system crashed. They had so many visits to their website, their system crashed. So who can be harmed here? Clearly, it's Franklin Templeton. How can they be harmed? What we call a run on the bank. If all of a big section of their clients decide that they're going to divest in the relationship with Franklin Templeton, that's going to destroy the company. Who can be harmed? The employees, the company, you get it. So they made a decision. They decided very quickly to terminate employment with Amy Cooper. Now, I would ask you, can we take a poll? Mm-hmm. How many of you believe firing this woman was the right thing to do? And I'm going to pause and see what the answers are.
Okay, Brian, let's go ahead and flip
Okay.
the polls.
So I'm going to ask, the numbers say 62% yes, 38% no. I'm going to invite, and if they type, I can see, right?
Yeah.
So I'm going to invite someone who voted no to type in why you believe no was the answer, the correct answer. I can pretty much guess why people who said yes said yes. If you said no, type in why you believe that was a mistake to fire Amy Cooper.
And Vintage, while we're allowing people to type in, give them a moment to do that. Have you heard anyone like in discussion give you a reason on why they think this may have not been a good idea?
Yeah, so I'm starting to look at what's coming in. So the issue that folks wonder is she was on her own time, engaged in an activity that has absolutely nothing to do with the business. And so is it really fair to fire this woman? So when you're in a crisis and you're asking yourself, how do I protect the brand? Here's the simple truth of it. It may have been slightly unfair as to fire her. But what you're really doing is measuring this. Let's say Amy Cooper comes back and says, I'm going to sue you for wrongful termination. And let's say you lose that. Let's say you pay $2 million out in that suit. That's much better than losing the company. And so when you're in a crisis, emotion is separated out and you're asking, how do I defend and protect the brand? And in this case, I'm reading one. She was Fisker, she was long, she was me. She was okay, it was there. Yeah, so some of the things that I'm reading make sense. But is your job in a crisis to say, how can I be the fairest to this employee, or how do I protect the larger entity? And what they decided to do, which was quick and it ended the thunderstorm for them, is they terminated this employee. And had they not terminated this employee, then they would not have limited risk. They may have been more fair, according to some of you, they may have been a bit more fair to the employee, but the crisis does not end, it extends. So I would tell you, they absolutely made the right decision from a crisis communication standpoint. And the truth is, we don't really have any conversations anymore about Franklin Templeton. So whoever managed that for them did a fantastic job. Now let's move forward, because what I think is, you can go ahead, what I think is really facing the majority of you in this marketplace is really this, which is COVID-19 and now civil unrest has completely changed the game for how we deliver service. So let's move forward. One more. Okay, so once you know that your business model is affected by an unstable market, these are the three questions you should always start with. And let me say you start with this, and I know we have some CEOs on the line, we have some CFOs, we have some marketing people. This starts as an executive group. This is done collectively among your leadership team. And the first question is the market demanding that we have a change to our service model? Well, I would say 98% of you, the answer is yes. Second question, is it a refinement or is it a complete change in how we do business? And then the final question is this temporary or is this long-term? So let's do the same thing. Let's use an actual example. Let's move forward to the next slide. Okay, so I'm going to call this the Charlotte Symphony Orchestra, not because it is, but simply because I used to sit on the board of directors for the Charlotte Symphony, and the balcony seats remind me of the Blumenthal Performing Arts Center. I'm sure somebody on the line knows exactly what hall that is, but for purposes of this conversation, this is the Charlotte Symphony Orchestra. So the Charlotte Symphony Orchestra has been impacted in a great way. How is that? Well, they can't, what's their traditional model of business? Well, their model of business, their revenue model is really threefold. Okay, first, they sell tickets, and people come to that concert and they sit in those beautiful maroon chairs, and they sell two types of tickets. They sell a classical ticket, classic series. They sell the pop series. The pop series, as you all who are in the arts organizations know, that's the on-ramp, right, to a larger relationship. That's one revenue stream. The second revenue stream is donors and sponsorships, okay? And then the third is grants. We're going to focus on sections 1 and 2. So if I cannot have a concert, right, if I cannot sell those tickets, most of which are pre-sold, how am I going to engage my consumer, protect my revenue stream, and manage my cost? And in their case, this is completely a new model, because what your symphonies across the country are doing is they're now hosting small artist performances, like what you see on the screen, a quartet or some sort of ensemble. They're having these streamed live, or they're taped so that folks can participate. They're actually doing things like having rehearsal. You can actually see an artist rehearse at home and participate in that way. And so how do you make money off of that? And that's what the organization is having to sort through. Our business model, this isn't a refinement. This is a complete change. So the organization, the executive group has come together and said, yes, the market has demanded a change. And by the way, this isn't a refinement, this is a complete change. Now let's go forward. So the next issue is, so we basically, oh, by the way, the answer is it's temporary. We do not believe that it's a long-term model. Once COVID ends, once social unrest gets sorted out, we're going to go back to having concerts. So this is a new model. It's temporary. Okay, go forward. So if you're, let's say you're the CEO of the Charlotte Symphony, you should then start to have a conversation with your VP of marketing. And that VP of marketing or your outside agency should be asking the organization, or you should ask yourself, 2 very specific questions. Okay, so 1, refinement. So it's not a refinement, it's a change in service. Can we communicate this change within our existing framework? Okay, now I would say that with the symphony, the answer is probably yes. We know who our ticket holders are. They've been buying pops and classical with us for years. We know who our donor pool is. They've been donating and working with us. We also know that our marketplace is the typical symphony orchestra is going to really appeal to about 2% of the marketplace. So our traditional framework is probably intact. Now let's go to the second question. Is a new campaign or marketing initiative required? Absolutely. Because the product has changed. The value proposition has changed. The interaction with the consumer has changed. So see where we've gone. We've gone from the market is demanding a change in how we do business. It is not a refinement, it's a complete change. Our framework for communicating with our donors and our consumers is intact. We like that, but we do have to have a completely different message around value. So that moves us to the question of how do we communicate value? And so you can pull all 3 of these up. I think there's 3. Is there 3 or 4? Okay, this is it. So now your agency or your communications group within your organization has to say, what is the unique need that exists? Which is we're just really flipping the original question on its head, which is, did the market demand change? Yes, it demand change. What's unique about the marketplace now? Well, the unique piece is obviously that we can't do business the same way, but actually we're looking at this through a different lens. If I were running the symphony, or if I was the symphony's agency, what I would say is this. There's a lot of conversation right now about tragedy fatigue. And I'm curious, I don't think we have this queued up, but I'd be curious to know how many people have heard that phrase. But there's a lot of discussion right now in the news about tragedy fatigue. And if you're not familiar with that phrase, basically it means this. I've gone through COVID. Now there's protesting in the street. African Americans are being killed. There's marching, there's looting. How much more can I take of this? This is not the world I thought was ours. And I can't even turn on the news without being overwhelmed. I just need a break. I've seen so many people talk about, I'm taking a Facebook break, or I'm taking a break from all media. And they're doing that because emotionally enough is enough. Well, that's the unique need, I would say, if I were the symphony. And how are we uniquely positioned to meet that need? Well, how much has been written about art as medicine? What we know is that people who participate in the arts, whether they're producing the art, viewing the art, interacting with art, what that does is it is one of the great stress reducers in our life. We are at a place in our lives where stress is at an all-time high, and the symphony has part of the solution. We know that interaction with arts, participation with arts, improves cognitive skills. It slows cognitive decline. It creates a tranquility and an interaction that we need under normal circumstances, but now is at an all-time high. So this starts to help us begin to say we can define a very unique need that we are specifically set to meet those needs. I won't get into how to best communicate our solutions because, quite frankly, the Charlotte Symphony has not hired me yet, so I won't answer the last question. But you see, I just really want you to see how the process led us to where we understand what we need to do as an organization. Now, that's a total departure or a new model. I'm going to go through a second one. Can we advance? And I'm going to say, here's an example of a refinement. Now, if any of you on here have ever heard me speak before, and I think I saw on there, Randy is on here, who's a friend of mine in LA, you know that this is one of my all-time favorite clients. And it is not my largest client by any stretch of the imagination, but I love this client. It's a private faith-based school in Dublin. And so let me just give you a backdrop. So this school's in Dublin, which is Alameda County. For those of you who live outside of California, Alameda County is one of the key counties in the COVID story. It's the county where the cruise ship that was out for 2 weeks finally docked. It docked in Alameda County. It's also home, or it was home, to our beloved Oakland Raiders, who left us and went to Vegas. If there's anybody on here from Vegas, we don't like you very much because you stole our football team. Okay, let's go for it. Now, this school is also the one school, the only school in Alameda County that never missed a day of class when COVID hit. Not just a day of class, it's K through 12. For its high school and middle school students, never missed a single period. That was their claim to fame. We got them on the evening news. We told their story. It was a big deal. It was best in class. Go forward. So we had to, then they came to us, and this is the beauty of this client. They came to us, and because we had worked with them enough on these points, that they said, we believe the market has said there's a new need, and we have a solution. So in their case, they're still teaching school. In their case, they still have kids in physical classrooms or kids in virtual classrooms. Their peers, public schools and other private schools, actually missed a week to 2 weeks of school before they were able to set up virtual classrooms. We believe that this is a temporary solution. However, we cannot define how long this temporary solution is going to be in place. But we darn sure believe that we are best in class in this temporary solution. So can we communicate within our existing marketing framework? Well, the answer is yes. Why? Because the radius of 12 to 15 miles for this private school, which is where they draw from, is the same. So all the vehicles and the outlets that they would typically use are intact. Is a new campaign or marketing initiative in play? Well, on the last example, what we said is we absolutely had to do it because it was a whole new model. In this case, it's not a whole new model. So there's a question, should we, engage in a new campaign? Well, what we said is absolutely, because who's our consumer? Who makes the decision around whether or not a family or child goes to private school? Well, I apologize to all my male viewers out there. It ain't you. It is mama. Mama decides whether or not we're going to put Johnny or Sherry or Linda in private school. And what is mama frustrated about right now? She's frustrated about the fact that Alameda County or Dublin Schools or whatever the school district is cannot tell me what the plan is, because we're going back to school in about 75, 80 days. What's the plan? Can't get an answer. Couldn't get an answer in May when we were saying, how are we going to finish school? Very frustrated. The kids were graduating from middle school and elementary school, and there's no graduation. So you have a consumer base that is frustrated. And by the way, it's not Dublin Schools or Alameda County's fault. It's a pandemic. But in this case, you have a organization that was stellar and is set up to do things that the school district and its competitors are not. So we absolutely want to go to market, and we want to exploit that opportunity on behalf of the school. And so do we think this is going to work? Because what I'm going to do is walk you through this, and we have a new commercial that is hitting today that I'm hoping we will be able to show you, but I think when they did the dry run, the sound was a little tricky. Do you think I'm going to walk through this. What's the unique need in the marketplace? The unique need obviously is COVID, but we're going to flip it on its head. The unique need is I want my kid to go to regular school as best as possible. And this idea of pass fail, I hate. They didn't come this far to be pass fail classes. So give me regularity and certainty. How are we uniquely positioned to meet that need? This school had all the technology in place before this happened. That's why they never missed a beat. How do we best communicate it? We show what success looks like. And quite frankly, we're going to play off of the frustration in the marketplace and drive home that we are uniquely qualified to meet the need. So this spot, it actually airs in the marketplace today. My hope is that you can hear it. Go ahead and play. I don't think they can hear. No? Bear with us, folks. Sorry. If you can't do it, it's okay. We'll set it up for them to view. So here's what I think I remember most of the script. It reads something like this. We want the best for our kids, but uncertainty, parents as teachers, and we want the best for our kids, but uncertainty, parents as teachers, and pass fail is not what we signed up for. And then it goes into Valley and it talks about not one day did were our kids left to their own devices. Not one day did our kids miss a single class of school. And not one day did education take a back seat. And then it says Valley Christian, and it shows a hero shot coming in, and it says, Valley Christian always ready. I guarantee you the phone will ring off the hook on this campaign, because this organization said, what's going on in the marketplace? Does it demand a change? The answer is yes. Is the change a complete departure from our business model or value proposition, or is it a refinement? The answer was it's a refinement. Once they understood it was a refinement, it says, what is the unique need in the marketplace? The unique need is consistency for children in their education experience. How are we uniquely qualified to meet that need? No one got this right in our region but us. And I'm talking about the East Bay because I do know we have some folks online from same school, same name of school, Valley Christian, but they're in San Jose. So to my friends in San Jose, you might have gotten it right, but in the East Bay, there was only one. And so how do we communicate that? And if we were able to show you the spot, you will see and feel both the frustration at the beginning of that commercial, and you will feel the victory on the back end of that commercial. And this campaign, feel free to email me in a week or two and say how many hits, how many calls. I'm happy for you to challenge me. This campaign will be a great success. So I apologize. Do you think you can play it now? Okay. So Marie, now I get to be mad at you. I was frustrated with you when you were right. Now I can say, no, I'm just joking. We'll set that up. Here's what we'll do. We'll are you posting this?
Yes.
Online?
Yes.
So we'll post the spot online so they can get to it. Now we have our next polling question. No, I want to do something else. Is this the polling question now? Okay, let's go to the polling question. Okay, but before you ask them, pull up the next slide, because I want to talk about something that I know most marketing agencies don't talk about this. Pull all four up. Okay, so this isn't the one I really want to zero in on, but if you get to this point that I just talked about, where you understand refinement or complete change, how you're uniquely qualified. Once you get here, quality of messaging is a must. So make sure quality of messaging is always important, but when you're in an uncertain market, it's of huge importance. Targeting, this is something that nonprofits are starting to really gain ground on. But now don't quote me on this number, because I have no research to back it up. This is intuition. But we've worked on enough nonprofit work to say that you're really talking about, on the low end 12 or 8, on the high end maybe 20 in a given market. That's about what percentage of the marketplace really consistently gives money to nonprofits. So targeting is important because you really want to have conversations, if we're having donor campaigns, with the right people who are going to give. Now, I'm not talking about the consumer side. So if I used the symphony orchestra earlier, if you're a theater arts group, you also have a consumer side. But from a donor side, general marketing is not the best approach. It should be a complement to target marketing. And anytime you can give ROI or explain why that gift or that interaction is going to better the value proposition, the goal, the service model, the impact on a community, it should be embedded in your messaging. But this last one is the one I want to focus on as we get to the next slide, because if you've made it this far, this is where nonprofits get this wrong so much. And that is, do not be late at don't be tardy for the party, okay? Don't be late, because here's what happens. Move forward. You get this far, one more. Keep going. One more, okay. And this is what gets in your way. I've seen it so much during COVID. First of all, it's this. Should we be doing this at the same time we're laying people off? The answer is yes, you should. Your business model is significantly challenged. You might have even spilled over in the true crisis, but your business model is either under a significant refinement or a complete new change in the model. And you've got to get to your donor pool, and you've got to get to your consumer, and you've got to communicate why you continue to add value and why in this unique situation, you're of greater value. And you have to move past the shame of consciousness, because if you don't do that, more people will lose their jobs. So that's the first obstacle. Then once you get past this, I can't count how many times you run into boards of directors who believe they are co-operators of the organization. Your board of directors is involved in oversight, not co-management. So if you're a CFO on this call, if you're a VP of marketing or turn to your CEO, if he or she is sitting watching this with you, and say, get the damn board out of our way. Because the board of directors does more damage in these situations than they do good. Because they want to see the messaging, they want to collectively tweak the messaging, they want to tell you about their friend Shirley, who gives money for this reason. Get them out of your way. Leaders lead, and that leads to resources. Make the tough decision. The organization can either be temporarily impacted, or it can be a long-term if you don't move quickly and sort through these. And that's back to message saturation. If you don't move quickly and you're late to the party, or you're late to the dance, or tardy for the party, and we're talking about 20% of the market, those funds are donated. Paul, we did a presentation, I think, a month and a half ago, and we talked about the change in tax credits for giving. I believe it used to be that it was 50 cents on the dollar up to your annual income. But with CARES Act, if you make $200,000 and you give away $200,000, you get to write all of that off on your taxes. You get full credit for your donations. Some of you may be saying, well, nobody's going to give 100% of their income. Well, remember, there's a lot of wealthy people who don't pay themselves all of what they're worth. So yes, there are plenty of people out there who would give all of their 100% of their income because they're sitting on wealth. If you don't know about that, and if you're not doing what we're talking about, I promise you, your colleagues on this call have beat you to the punch. So with that in mind, I would ask you this question. As you look at the obstacles to success, which is your greatest obstacle within your organization? Shame of conscious, board of directors, the ability to make the tough decision about moving money, or we're already late to the party, and people have beat us. Other nonprofits have beat us. We closed. Board of directors, I'm not surprised. I am surprised it's only 50%. And by the way, I've been a board of director. I've been part of the problem. I am reformed, but I've been part of the problem. Well, I think I've used most of my time, but I have a few minutes for questions, if there are questions.
We'll go ahead and encourage everyone to type in any questions in the chat function. And Vintage, you can answer a few of them.
So did the school, you've just moved it, did the school use full distance learning? So what the school did is on day one, they had teachers in the classroom at the front of the classroom with the chalkboard or the whiteboard teaching, and every student was at home on their computer. And for the high school and middle school, they actually changed periods. So the kid could go use the bathroom, get a drink, whatever, come back to his or her computer, new teacher. And so it was as if they were walking the halls of the school and interacting with their same classmates. What's the next question? I'm laughing because it says, yes, vintage, put that board in its correct place. I didn't get the...
We're getting, we're getting a couple of questions that the poll, for some reason, a lot of folks didn't get a chance to answer it.
You want to open it?
Yeah, let's open.
We're going to reopen the poll. Okay. Don't you just love conferences online? They're so much more casual. And so as they do that, one of the questions is around digital. So how important is digital? Digital, let me say I'm not the most objective person in the world on this because we have a big digital group, so I should say that. But I do have a well-reasoned answer, and it's digital is everything in nonprofit. Especially if you talk, well, either also on the consumer side as well as the donor side, we can identify a profile. Let's say you're a food bank, okay? We can identify a demographic profile based on your donor list. Who, why, who are they, what they look like, why do they give to these types of organizations, why it's important to them. We can match that profile. We can look at the geography for which those donations have historically come from, probably within a 25-mile radius of the actual center, shelter or homeless. If it's a homeless shelter or a food bank, it's going to come probably 25 to 30 miles within that radius. And then we can actually track response and over time refine the data pool so that your ROI on your spend gets better, higher, larger donor per dollar over a certain time frame. Not as easy to do that in traditional media, but let me tell you, traditional media is important because traditional media is how you also communicate emotion, connection, and there are things that you can do there. But you can have some of that motion in digital. It's not going to be as strong. So that was one of the questions. So where are we at in the poll?
So we just relaunched the polling question.
Oh, board went down. What was obstacle 4? Go back. Tardy for the party?
Obstacle 4 was
message saturations, tardy for the party. So that's what shifted. And folks, if we're having this conversation now and you have not taken advantage of the opportunity, then I will tell you, you've missed a golden opportunity, and you really need to be asking yourself, how do we catch up? And I am getting the hook. It is 11:59. I turn over to Paul Brady. I will tell you that I apologize. You had to look at this mug. Now you have the very handsome and debonair Paul O'Grady. You take it from there. Thank you for allowing me to be with you. Go ahead, Paul.
Thank you, Vintage.
And Paul, before I let you close out the program, we do want to launch our last polling question. We'll give everyone some extra time here to answer. And the question is, Armanino's nonprofit symposium provided valuable information for my organization, true or false? Definitely want to make sure if you're here for CPE, you answer this last polling question. And as a reminder, the day has been recorded, and we will provide the recording of the slides within 48 hours for everyone. And we'll go ahead and close the polls. Great. And we'll hand it off to Paul to close us out.
Thank you very much, Marie. I know we're almost out of time, so I will be brief. First and foremost, I'd like to thank all of you for attending our session today. As I mentioned, this was our first time 100% virtual with all of our speakers in different places. So I really want to thank everybody who helped out with this. I think for the most part, with a couple of technical glitches, we navigated it pretty successfully. So thank you very much for that. Want to thank our speakers and panelists. Without our speakers and panelists, we cannot put these events on. I do appreciate all the time that they spent in preparing for this, and also for taking the time out today to talk to you and hopefully share some words of wisdom that you can take back to your organization. And finally, I do have to thank all of our folks who helped put this on from a technical and a content perspective. But I have to make one major shout out to Marie Leon here, who has been working tirelessly for a number of months now in coordinating and navigating through COVID and civil unrest and technological problems and getting us all tied down to do this. Without her, we could not be offering this event. So thank you so much, Marie. You were awesome. With that, as mentioned, there is a recording of the presentation, and we will also be sending out a live version of the video that we were unable to play earlier on. And finally, want to thank my two colleagues, Tom Schulte, who heads up our nonprofit practice in Southern California, and Jeff Owens, who heads up our Southwest region nonprofit practice. They are wonderful nonprofit technicians, and it's a pleasure to work with them. Thank you very much, folks. Have a good day, and most importantly, please do stay well and please do stay safe. Thank you.